Assalamu alaikum everyone. I would like to welcome you all on behalf of Total Communication to the 13th Mobile Commerce Conference, and it gives me a pride to tell you that we are going live virtual, making this event live and virtual. We have got some really interesting panel, as you must have all gone with the agenda over here. So without wasting time and starting here, I would like to mention that we are thankful for our supporters, State Bank of Pakistan, Pakistan Telecommunication Authority, and NITB. Also, our exclusive sponsor, Finca Microfinance Bank. So moving forward, I would like to request our honorable chief guest, Mr. Sabahat Ali Shah. I believe he doesn't need any introduction. He's a renowned personality from NITB to make a guest note over here. So request Mr. Sabahat Ali Shah to...
Assalamu alaikum, and I really welcome all of you wholeheartedly on the Mobile Commerce Convention this year. I think this is one of the most important subject areas that the public and the private sector collectively should be talking about in days and weeks and years to come. We got to be extremely agile and vigilant how we can increase the usage of mobile commerce in Pakistan over the next few months. It is going to give us huge boost towards our GDP, and that's where the whole world is converging into. In the next few minutes, I would like to talk briefly on two specific subject areas. One is specifically in the context of mobile commerce, and the other one, I would like to talk a little bit upon the open data strategy that the government of Pakistan at government level as well as at the private sector level that we should be thinking about, we should be visualizing. I think most of us know that almost 70% of our tech exports go undocumented year on year basis. There have not been mechanisms developed over the period of time that would compel our sellers and our exporters to get this process executed within the government processes and make each and every buck accountable to the government. So that's one problem area I think that we need to address. We need to make sure that the foreign remittances that are coming from abroad, they have to be delivered in time, in whatever currency it's coming through. Our e-commerce itself should be proliferated, right? The investments should be done in terms of time, in terms of resources from the private and the public sector both, especially from the public sector, because policy is the most important piece that we need to nail down if we want to improve the e-commerce in Pakistan. So what steps we should be doing, which we have recently started at the government level as well. I think there is a dire need of an international payment system that the Pakistan government should own and give the international payment system access to the citizens, to the freelancers, to the tech startups, to the enterprise businesses as well, so that they can use this payment system where government of Pakistan actually own the whole network, and the sellers should be able to minimize their cost of funds being remitted from overseas, from anywhere in the world to their banks, to their accounts in Pakistan. So I think that is one of the most important pieces I just wanted to talk about, and we have been working really hard with multiple stakeholders within the government to create a policy which would enable deployment of this kind of an infrastructure in Pakistan. When I say payment system, what I actually mean is that the government will own this kind of a payment system. Think about, Alipay of Pakistan, where end-to-end remittances, hopping, or you can say the delivery of remittances and the movement of funds from abroad will be done on the network which Pakistan will own. That is the vision which we are working very hard on. What benefit it's going to give to the citizens, to the freelancers community. It's going to lower the cost of transaction for each and every freelancer who is exporting services or who is delivering services to any entity, any enterprise across the world. They will be able to get instantaneous transfer of funds from internationally, from any bank to any bank or anywhere in the world to the bank located in Pakistan. So that's the most important piece which the freelancers community have been looking for. But for the government itself, another important thing that we need to figure out in this particular whole scenario is that we should be storing each and every financial transaction in context of exports or e-commerce within the parameters of the network of the government of Pakistan, so that our transactional data is not shared anywhere else, in the world. So this problem is also solved once we build and once we roll out our own payment system. On the open data strategy, I would like you to think about this huge investment community in the Western world who have been looking around the developing countries, emerging economies like Pakistan, to come in and invest across different industries to reap out, the benefits that they have always envisioned out of an investment fund. So what do we need to give it to them? We need to give them a visual that if you come and invest in this particular sector, let's say healthcare, you will be able to get your return on investment within a specific stipulated time period. How can we do that? We can actually give this kind of a visual through our open data strategy, open data policy, where we can give these investment communities, dashboards where they will be able to see how our businesses are being run, what kind of policies government has been building across these industries, what patterns are emerging across different businesses, which this is going to give them a comfort that if we come in and invest a dime, in Pakistan, we would know how the investment patterns will turn out to be in terms of productivity. And this is what we are going to see in line with the policies that the government has developed. So very important. There has been a scarcity of this kind of a data that exists at the national, at the international portals of Pakistan, where the investment community can come in and see what's going on in Pakistan. There are key objectives and the key initiatives that we need to take in this context is to match and merge multiple disparate systems which exist in the government of Pakistan at the federal level as well as provincial level, to create a visual, to create a scenario which would look like an attractive scenario for international business communities, international investors. I think this is the most important thing. Think about industries like tourism, industries like manufacturing, industries like real estate, how the businesses are booming, in these industries. If a financial investor sitting somewhere in the Western Europe or in the United States, if they want to see, they should be able to get a clear visual that in which particular segment in this particular industry I would invest and what kind of a benefits I would be getting 1 to 3 years down the road. I think most of the countries who have gone from point A to point B in the last 10 years, they have made, they have created these policies of ease of doing business with those countries for the foreign investors. So I think open data strategy, and then the tooling behind this, building an open data strategy, open data based visuals, dashboards is the key. And at the government level, we are investing a lot of time and resources to build this plumbing, to build these visuals for the investment community. At the end, I wish you all the best and hope you extract the maximum out of this convention. And good luck to all of you guys. Thank you very much.
Thank you so much, Mr. Sabad, for sharing such a detail and in-depth of what NITB and overall the structure of the government is planning to invest in, focus on subjects like freelancing and all that. So moving forward, I would like to request Mr. Fareed Ahmed Khan, CEO of Finca Microfinance Bank, to share his keynotes with us. So here, Mr. Fareed Ahmed Khan with you.
My dear colleagues and virtual participants, Assalamu alaikum and welcome. Firstly, congratulations to Total Communications on organizing the 13th edition of the Mobile Commerce Conference. This conference has indeed become the gold standard for digital commerce in Pakistan. And thank you for giving me this opportunity to speak to this August forum. I will be talking about strategic choices for digital services providers in this age, or as I see it, a prevail or perish choice that is facing the financial institutions. Let me start with this famous quote from Winston Churchill, where he said, "Never let a good crisis go to waste." And our friends at Total Communication have demonstrated how to make good of an opportunity offered by the COVID crisis. They have gone virtual with this conference. So how can the financial institutions act smart and convert this opportunity to transform and grow? I will spend the next few minutes to share my views around these key themes. So the customer experience in the digital era is perhaps the most important feeling that a customer can get out of this change. And a major mistake which many of the participants make is that they keep the technology at the center of this change rather than the customer. The customer desire is put at the back end, and we try to wrap our product around the technology that is available to us. In my view, the key message here is that when you break a barrier in process and reach, don't break the customer experience and the human touch that comes with it. Customer expectations and demands are creating interesting challenges for us as well as opportunities, and we have to ensure that the value proposition that comes out of the change is actually of benefit to the customer and not for the financial institution or the provider of that service. The rise of omni-channel experiences and digital platform has led customers to not only wanting but expecting a superior user experience from all the products they interact with. One which is consistent, intuitive, generates trust and excitement in usage, not simply a product which is there because of a technological breakthrough and doesn't have the customer as its focus. So I've given an example of a customer journey which has been transformed. So a customer who was using a brick and mortar structure was using the traditional channels and was getting the product that he needed over a couple of days or sometimes even weeks. But when we went digital, the same customer was able to access the channel through a mobile device or internet and was able to get what he wanted in a matter of minutes. So that's great, but what is the customer thinking here actually? Yes, the customer saved time. Yes, it was hassle-free, but did it have enough use cases around it? Did it satisfy its financial needs? I mean, this is the crux of the change that we need to understand and we need to implement as service providers. The various channels that are available to the customers right now are confusing and they are increasing on a daily basis. A study by McKinsey tells us that almost 90% of the use cases in the digital platform will be around mobile devices, followed by internet, and then third-party and other platforms. But among all these channels that will be available, will the customer have the same experience that he had when he was approaching the branch physically? Will there be a human touch? Will our products be centered around customer preferences? Will the touch points along this journey be understanding of what the customer actually wants? Or will there be simply technological touch points which will improve the interaction, yes, between the customer and the financial institutions, but simply ignore the human touch, the feeling of warmth, the understanding and customizations that sometimes come with the human touch. So the technologies that will have a significant impact around it: artificial intelligence, open APIs, blockchain technologies, and virtual reality and or augmented reality schemes, which will be now be the center point of all the changes that will be coming through in this digital age. So we now look at how the COVID crisis is acting as an agent of change and has proven to be a blessing in disguise for the digital uptake. And I'm quoting from some figures that have been released by OneLink that the daily IBFT transactions during the COVID crisis, they increased by 370% during the pre-COVID period, and they touched almost 700,000 transactions a day during the pandemic. Likewise, the bill payment services, they increased almost 6 times during this period, and mobile top-ups and other allied services, they increased almost 30%. Clearly, there is a move, and the pandemic increased the push towards the adoption of the digital technology, and maybe it was the big breakthrough or the barrier breaker that we were hoping that came through as a result of this crisis. EasyPaisa, which is one of the largest digital platforms available in our country, mentioned there has been a 17% increase in the number of daily transactions, whereas Daraz, which is the biggest online shop in Pakistan, it said that it saw an 8-fold increase in the use of e-wallets by customers on average. So clearly, it has been a watershed moment for the industry. But are we taking advantage of it? Yes, the existing use cases are increasing, but there's a whole universe out there which needs to be brought into this fold. There are almost 100 million individuals, adult individuals in Pakistan that are unbanked. And the financial inclusion targets for 2020 were looking at 50% of these coming into the digital platform fold or into this realm. But unfortunately, the numbers that are coming through to us do not reflect that. We are way, way behind this target. And the important thing is that even the number of users that we have with us, most of them are dormant. So the number of active accounts are actually much, much smaller than the 100 million target that was envisaged in this strategy. But having said that, the COVID pandemic and the resultant change in behaviors has given us a huge push. And there's a whole new world that has opened out there. The estimated number of SMEs in Pakistan is in excess of 4.1 million. But the current SMEs that are actually banked by financial institutions are less than 200,000. And the National Financial Inclusion Strategy is aiming to have 700,000 with us by 2023. Now that's a huge jump from 190,000 to 700,000 in 3 years, but that's still the tip of the iceberg. We are looking at more than 4 million SMEs that are available to us. So the bottom line is that there's a vast universe out there, and we have to use this change in behavior and this breakage of barriers to make sure that we get the unbanked into the system and we increase our reach as the behaviors are changing. The impact of bringing these use cases, bringing these adults, bringing these SMEs into the financial sector is going to be huge for our economy. The GDP impact, as calculated by a study by McKinsey again, is that it will increase our GDP by almost 20% by 2025 if all these unbanked individuals and SMEs are brought into the fold of financial sector. We will have almost 93 million of new use cases and almost 7 billion of new transactions which will be captured by the system which is a boon for the tax collecting agencies, a boon to document the economy. The increase in productivity that could come as a result of the use of these digital channels is estimated at 34%, and it will increase the efficiency of our economy as well as the reach out of our businesses, of our financial institutions, and all the digital platform providers that are ready to tap this opportunity. So now this brings us to an interesting part. So how can we sustain and accelerate the changing customer behavior? Because yes, we can bring more people in the fold, but if they are not using the services or if they go dormant after some time, all that energy, all that progress is lost. So as far as the digital payment infrastructure is concerned, State Bank of Pakistan and other stakeholders and regulators have played a huge part in making this push and attracting their customers. The reduction in fee and in certain cases complete abolishment of fee in the use of digital transactions have led to a surge in the use cases, and we have seen that more and more people are using the digital platforms for their day-to-day financial needs. And it makes sense. As you increase this payment ecosystem, as you bring more and more people into the fold, and as the links get integrated, the number of use cases will continue to increase, and there will be enough time for financial institutions and the government to make money out of this. But let's not kill it right here by imposing costs and restrictions and taxes on them, as it will discourage the adoption of these platforms. We have seen numerous moves from schools to fuel payments to tax payments, payroll processing, tickets. I mean, everything under the sun is now coming under the roof of this digital payment ecosystem. And as a result of that, the number of transactions and some of the figures that I've given you before indicate that the number of use cases is rising by the day, and we need to sustain that. We need to keep this momentum going to ensure that the number of cases keeps on rising, and more people, especially people who are just coming into the fold of financial system, are using these platforms. Now, I come to the last part of my presentation, to how to reshape the banking for this next normal and to cope with the challenges associated with digital banking. Now, overcoming the customer behavior challenges is the key, and as I've mentioned some of the use cases and the increase in the usage, it is a challenge for all the stakeholders, technology partners and regulators, and we all have to work together to bring this change. We have seen that simply bringing apps and making them cheap, it doesn't change behavior. Our addiction to cash as a society is a huge impediment to this change. So what we can do to ensure that this behavior change continues? We need a continuous enactment of supporting laws. This includes privacy laws, e-signatures, digital identity theft, similar things that we have seen happening in most of the developed world need to be introduced in Pakistan. Asan mobile accounts and Roshan Pakistan type initiatives, where the regulators have come forward, like for example in Asan mobile accounts, we have the State Bank of Pakistan and PTA coming together, and the government acting as the catalyst to ensure that the financial system comes together to deliver these products. National digital literacy campaigns. We want proliferation of broadband 4G type services, high-speed networks, and availability of devices so that people can access these services. Reduction in transaction costs, very important, and we have seen how it has impacted the changes in behavior during the COVID pandemic, when the central bank asked the banks to reduce these costs or abolish them, and the number of use cases surged. And it makes common sense. Today, if I go to a bank and put my check in for transfer of funds from one account to another, it's a free service. But if I use a mobile app or IBFT on internet to transfer funds, it costs me. So why would I use the digital services? During COVID, when these costs were reduced or abolished, people start using them. So in order to reduce our addiction to cash, the government, the central bank, and the financial players need to reduce the cost of transaction. And my last point, discourage cash moves. That can happen by giving discounts on e-transactions, giving tax benefits, simply bring people in the fold, document the economy, make people addicted to e-transactions instead of cash. And as I said, there will be enough time for everybody then to make money out of this platform. So what is the next normal? I think financial institutions will be moving towards a new discovery zone where they will be reallocating significant amount of capital and capex toward efficiency and process improvements. Because this use case, the last 6 months, they have given us new ideas to reallocate our resources, to increase our outreach to customers, and modify our product offering to increase our profitability and to increase our customer reach in the long run. The new normal will be our digital platforms and digital agendas, products that are delivered as per the requirements of the customers through more efficient channels, and improving customer experiences in ways that address the efficiency, profitability, and product differentiation along these routes. What customer wants will be the key and not what the technology determines, as I've said it earlier. So whatever use cases you are trying to determine or develop, they should be around customer experiences and what they want and how much value you can add around there. In the end, I think we have a lot of questions that we need to answer amongst ourselves. The revenue drivers, how these platforms will evolve into such, how your distribution strategy will be configured for the next few years in this digital age, and how will you transform your approach to reach out to customers, to onboard them, to assess the risk, and how to service them going forward. And lastly, how will the decision making in this entire approach work? Decision making at the end of the institutions, decision making at the end of the customer, and decision making at the end of the regulators and other stakeholders, because we have a whole plethora of different processes that we need to channelize, including the KYCs, the transaction monitoring, the risk monitoring. Everything needs to be wrapped around this digital platform in order to ensure that the institutions, the consumers, and all the stakeholders benefit from this change. Thank you so much for your time. Thank you for listening to me. If you have any questions, you can post to myself directly or to Total Communication. Allah Hafiz.
Thank you, sir. Thank you, Mr. Fareed, so much for sharing all the details in depth and giving your holistic view of the digital banking. Definitely, this COVID has made a transformations, a drastic change into our digital adoption and way of working, lifestyle, and everything. Absolutely, sir. So I put up a question to you all that what do you guys think of chat banking? So one of my favorite gurus, I would say, Mr. Hannes Weinsbergs from Clickatil, would like to share his views. Let's welcome Mr. Hannes Weinsberg from Clickatil.
Good day to all of you. It's a real pleasure to be here, even though I'm in Florida. It's been a long time. Last time that I was speaking at this event, if I recall correctly, I had a broken ankle and short hair and no beard. Now my ankle is healed, but I've become a real old man with no hair in the front and a ponytail in the back and a beard. But it still feels like I'm there with so many friends that I've made, and I just want to greet all of you. It's really special that I can be with you. Next time it will have to be in person. Lots of things has happened with me since we last spoke. I decided that it would be appropriate for me to retire, and then realized after 2 years that retirement does not work for me. I need to be doing something exhilarating. I need to have customers call me and say, when are you delivering, or the system is down. And so what I have done is I have joined a very exciting company called Untitled. We specialize in messaging systems and particularly in chat banking. And I thought it would be interesting for you to hear a little bit more about what we do and how we think that chat would impact and change the world that we do business, that we do banking in. And so a little bit about Untitled, if we can go to slide 2. We're actually a 21-year-old company. We operate, we have offices in 4 countries, but our infrastructure and our technology covers more than 220 territories. We were the first company that provided commercial SMS services. We have customers, big brand customers all over the world, including banks, that use our technology to communicate with their customers. We were the first company that partnered with WhatsApp, and the first 500 million subscribers to WhatsApp have been registered with the help of our technology. We were also the first company that deployed chat banking in WhatsApp. And so it's a company with a long history and with many milestones. But what we are doing now, I think, is much more exciting than anything on the journey so far. Slide 3, please. So what is our proposition? Our proposition is that we provide a very intelligent layer with an emphasis on chat and bringing it together with commerce, where we take brands and their services and we expose it to end consumers through all kinds of interfaces, whether it's SMS, messengers, USSD, WhatsApp, Twitter, and so forth. And we do it in a simple way where your customers are, in a way that is comfortable with them. I just need to maybe take a bit of time and make a distinction between chat commerce and something that I think you've heard of a lot, and that is conversational commerce. Well, from our point of view, those are very, very different concepts. Conversational commerce is trying to figure out how to enable customers, the end consumer, to get into a conversation with the brand. Therefore, the emphasis is on getting language right. There's a lot of emphasis on personality, of giving a bot a personality. It's important for the consumer, the end consumer, to understand whether they're actually talking to a woman or a man, and so forth. There's a lot of research going in that area, and while it's relevant, we feel that that's not what is important. We are particularly interested in chat platforms, chat applications on mobile devices that enables customers to interact with their digital world. And it is quite interesting if you go and look at the statistics. Next slide, please, slide 4. that there has been a significant growth in the usage of chat apps. If we look at the trend and what people spend, where people spend their time, then the consumers with mobile phones tend to spend much more time in chat apps, whether that's WhatsApp, Messenger, iMessage, and so forth. And it is therefore clear that customers are getting accustomed, they're getting used to interacting with their digital world through a social interaction by means of chat. And when we refer to the chat economy, we are extremely interested in how we could use the platform to bring commercial services and transactions to end consumers. And that's why we say we bring commerce to where your customers are. It's instead of having to have your app on the phone, how many apps are there? How difficult it is to find the right app when you want to do things, or to remember each of the logon credentials for each of your apps. How much easier would it be if, as a brand, you are stored in the address book of your customer and they could merely interact with you through a chat app, but in ways that they are very comfortable in doing. Not so much to have a conversation with you, but to actually get things done. And that is what we have a specific focus on to achieve. This is not rocket science. Next slide, please. We see that already happening in China with chat applications like WeChat and Alipay, where the transaction volumes have gone through the roof in terms of volumes of transactions and value that is being processed through chat applications. We in China, through WeChat, you could actually do person-to-person payments, you could do bill payments, you could pay for your taxi, and there are things that you can buy very easily through the chat application. Why has WeChat not been successful in bringing this technology to the rest of the world? Well, it's because it's a closed system, a walled garden. Everybody has to participate in the one ecosystem of WeChat, and we believe that is not sustainable, and that is quite frankly not where the majority of brands want to go. They definitely don't want to be held hostage by one brand, and they would be looking at offering chat services through many different chat apps, using many different back-end payment gateways, and do it in the way that they wish to do it. And therefore what is needed is a really open platform that can be utilized by banks and other businesses to bring services through the chat ecosystem to their customers. And this is just a natural evolution. Next slide, please, slide 6, of how banking changed over the decades. We've all lived, some of us still remember the first ATMs and telephone bankings with tone recognition, and then ultimately online banking, internet banking. That was and each of these new phases in banking was triggered by underlying architectural or infrastructure change. ATMs was possible because terminals and connectivity, network connectivity became possible. Before that, it would not be conceivable to have thought of ATMs. Similarly, internet banking or online banking was created in the 1990s when Netscape arrived on the scene and browsers were created. Same with mobile banking. Became more prevalent as the underlying ecosystem developed. whether it was USSD or smartphones, and that underlying ecosystem enabled a new way of reaching your customers to enable them to do banking. What has happened now is we have gone into a phase in the late 2010s where people started embracing a new way of interacting through an infrastructure that is that what we could refer to as the chat infrastructure. And many of these chat providers have started opening up their infrastructure in a way to enable other brands to get access to it. And we are specifically interested in how that could impact banking, because we are of the opinion that it's a much more natural way to bank. It is like sitting in front of your banker, like it has been in the old days, and interacting with somebody or some instance that knows you, knows the context, knows the history, knows your style of interacting with you, and that we believe is where people want to go. What about security? I know that you're asking about that. Well, in our view, chat banking actually enables security to be taken to a next level. In Clickatel, we have capability which we refer to as chat behavioral biometrics, where we keep track of indicators that would help us identify possible fraudulent transactions or suspicious behavior. Some people like to end their chat request with please, others don't. If we don't get the please at the end, then we know there's something suspicious. Some people like to have very long messages or respond very quickly, whereas others may have short messages, use specific words, and that gives us a biometric print of your customer. And if there's any behavior outside of the parameters of the behavioral print, we could use out of band security mechanisms like sending an OTP or invoke interaction where you have to enter a password and so forth. So we believe that security in this world has been taken to a new level where security is first and foremost based on knowing your customer. The more interaction you have with your customer or the customer have with you, the more you would have confidence to interact with them in a secure way. Next slide, please. And if we look at customer preferences, we see that customers actually choose to engage with brands through a chat interaction. Every piece of research seems to show that customers would rather use the chat paradigm to interact with other people as well as brands than utilizing a telephone or an email or all the traditional ways that we used to interact with. In Clickatel, we have developed significant relevant capabilities that has been built together in an infrastructure which we refer to as Touch. And Touch is, you could think of as an orchestration layer where you could pull all the relevant things that you require in order to do banking, and for that matter in e-commerce, together in order to provide a holistic solution to banking in a new economy. There are players that provide some of these elements and have solutions in some of these areas, but we believe that it is important to have a holistic approach where all these elements work together in order to bring a solution that is consistent, reliable, and can be and flexible. And for that, there's a lot of capabilities that must be made available. Next slide, please. It's easy to look at the value proposition for chat banking, and we have, having deployed our technology in multiple banks, running hundreds of millions of transactions annually, more so than anybody in the industry. We have quite a few metrics in terms of meeting business objectives, commercial objectives. We can show that we can increase revenues by increasing value transactions, increasing the ease with which people can conclude a transaction without discarding it or stopping it. We can show that we can show through our customers that we can reduce cost by taking a lot of the interactions that you currently have through expensive channels, specifically telephone channels, onto the chat platform, which leads to a lot of reduced cost. We can improve the engagement. There's a lot of indications that your customers would be more likely to read a message in one of their favorite chat apps than actually answering a telephone call or responding to an email. And so it's a mechanism where you could get in front of your customer much easier and get your customer to respond. As a matter of fact, today the way that we inform people of fraudulent card transactions is by sending them a message, because we know that it would reach them quicker, that they would respond to it quicker. This type of interaction also leads to better convenience. As I've indicated in one of the other slides, customers actually prefer to interact with brands and with their friends through the chat interface. And so what do you do with the chat interaction? There's significant applications that we have successfully deployed. I thought I would show you two just to give you a taste. I'm sure that there would be a lot of thinking and people that know the Pakistani market much more intimately that would be able to go and innovate. But next slide, please. This would be an example, credit card concierge solution where you, and by the way, I think the QR code may work, where picture a situation where instead of having to activate a card by phoning a call center, you could actually activate the card through your phone, lock it, unlock it, set limits, ask frequently, ask questions, get your card balance, get confirmation about the transaction that would happen, and so forth, highly integrated into a card. Unfortunately, these examples are a little bit US-centric, which is where we do a lot of our work, but I think it might be applicable in Pakistan as well. And then lastly, just an interaction with the call center. I think the number that you have on the screen is a demo number. It might work. I haven't tested it specifically in Pakistan, but you would have the ability that if your customer phones your call center with a mobile phone, that you could get the customer redirected off the call center directly onto a chat app, and immediately free up your agents so that customers can be self-serviced. We also provide capability where not only can the customer be self-serviced, the customer can also be serviced by agents. The advantage is that one agent could serve 3 or 4 or 5 chats at the same time, which obviously is different to a call center. And so I I think I've filled up my time. I really want to thank you. It's so heartwarming for me to think that I'll be able to speak to you in Pakistan, and I just wish you all the best. And may we all get through these difficult times, and that there would be a normalcy again where we could meet in person. I thank you very much.
Thank you, Hannes, for sharing such a lovely details with us. You have been the pioneer, and that's why I called you the guru of the industry for the fintech financial inclusions. So moving forward, I would like to invite our next keynote speaker, Mr. Saghir Mufti from HBL. So calling Mr. Saghir Mufti. Thank you.
Assalamu alaikum and good morning. My name is Saghir Mufti. I'm with HPL and I'm here to share with you our experience of how we adopted to a changing environment, a fast-moving environment over the last 9 months. It's about extraordinary use of technology in extraordinary times. So let me tell you a little bit about my organization first. HBL, 1,700 branches, 27 million customers, 40,000 Connect agents with a presence in 15 countries. So it was about agility in a crisis, making an aircraft carrier move like a speedboat. It was fun, it was hard work, and it was some sweat and tears. But we have gotten through it, and we are very proud of what we were able to achieve. And I want to share with you what we did. During the crisis, very early on, we implemented measures to safeguard the financial well-being and personal safety of 3 stakeholders: the customers, the staff, and the community. We did significant work to improve our business continuity management capabilities in 2019. We ran training programs for the gold, silver, and bronze team. We did executive training for our executive committee, running simulation exercises to practice decision-making in a crisis. All this came in handy during the COVID crisis. First of all, a little bit about our customers and what we did. We went to extraordinary lengths to ensure we support our customers. Early on, we made calls about customers we will support through this economic cycle on the credit side. And we'll stay with them to make sure we are their trusted partners, and we come out of this together. We work closely with the State Bank of Pakistan and with the Ministry of Finance to design and roll out key programs to assist the economy, the businesses, and individuals. As a result, we were one of the top 2 banks to disburse in a short time period in excess of rupees 5 billion for payroll financing. We actively communicated with our customers to assist them in limiting their exposure to the outside world by limiting their visits to our branch and taking care of their transactional needs through our digital channels. Numbers speak for themselves. HBL mobile transactions increased by 77% to 16.8 million in first quarter of 2020 versus the same period last year. Connect, our mobile platform, increased its flow by double amounts to rupees 94 billion. Call center volumes went up by 37%. Our e-inquiries jumped by 71%. And we saw a 40% increase in our acquisition of customers through digital channels. So the registrations went up by 40% during this period. So the numbers clearly show customers adopted to change when we offered them digital solutions. Customers were ready and willing to accept how to deal with the environment while keeping themselves safe and the communities they live in safe. For our staff, we took many years because we cannot operate on machines alone. We cannot operate only through technology. At the end of the day, you have to have staff to support you in your initiatives. Question is, where is that staff sitting? Question is, how many of that staff have to come to an office to do that? So we at our peak had 30% of our staff, which is close to 6,000 people, working from home. Even today, 20% of our staff is continuing to work from home. The remaining staff, a lot of them were on a 2-week rotation basis to create backup capability so that if one team gets unwell, the next team is there. So we created a red team and a blue team, and they would not be in the same premises at the same time. We created the capability for people to connect to their workstations, and their work requirements were met while being at home. So a large number of our staff was working from home with the same capabilities they had while working in the offices. Furthermore, 70% of our branches, following strict protocols, were kept open to ensure access to financial services throughout this period. Lastly, HBL was grateful to the staff for the support they provided our customers and the organization this period, and reflected that support by ensuring we provided financial support for medical expenses for 100% of their expenses when required by any staff member. So the company stepped up and our staff stepped up. Now, what were the measures we took to protect the staff? We initiated testing for the staff members who showed any symptom at the bank's cost to provide protection to the staff so that they know what's going on with their health. We had different sites from where we enabled staff to work. So people did not just have to come to the same building, they could go to different offices around the cities to be able to operate if they had to come and operate from our premises. We ensured provisioning of masks, sanitizers, gloves for all our staff on a daily basis throughout the period. We had installed readers for temperatures so that the staff could do a self-health check anytime during the day when at work. Rigorous social distancing measures were also put in place so that when staff is in the premises, moving around or sitting in their desk, there is reasonable distance to keep them protected. Elevators were put on a different protocol and limited number of people could enter the elevator at the same time, just to make sure our staff feels safe, stays healthy while working with HBL throughout this crisis. Furthermore, we leveraged the investment HBL made in its technology infrastructure over the last few years to enable people to work in thousands within weeks from home, and all this with a strong cyber security protection umbrella to ensure that the financial transactions being done using this infrastructure was within our firewalls and protected as per requirements of good governance, as per the regulations of the State Bank of Pakistan. Moving beyond HBL and its customers and our staff, let's talk a little bit about the community. We believe in being a responsible member of our community. We as an organization feel that our communities support us. Our communities is where our customers are, and those customers bring us business which keeps us in business. So to us, it's very important to be a responsible member of our community. To that end, we did take steps to help the most vulnerable, and we did what we could to give back to the community. The largest program for social benefits was run by HBL in partnership with the government of Pakistan, program called ASAS. We joined hands to deliver the ASAS Emergency Cash Program. It's the largest social safety initiative in Pakistan's history and in South Asia. And with the support of the ASAS team from the government of Pakistan and the HBL team, we have been able to deliver over 147 billion to close to 12 million Pakistani households. Imagine that, touching the lives of many million people through this program. And we congratulate the government of Pakistan for supporting the daily wage earners and the piece rate earners from the tragedy they would have suffered from without this program during the lockdown in the country. HBL's national presence, its branchless banking platform, Connect, and the investment in technology and, most important, talent enabled the bank to undertake this huge task, and we are proud that we have been able to live up to the expectations and the trust put in us by the ASAS program. And we thank our team, our staff, who worked 7 days a week in many cases, worked long days and long nights across Pakistan, hand in hand with the ASAS team to deliver this program. Now, we have talked about many things. I think the most important thing to understand is business is good, but doing business to support the community, doing business to stand up and be counted when it counts the most, and in a crisis it counts a lot, is what matters. Having the agility, the leadership, and most important, the desire to do better, the desire to excel even during a crisis, is what was demonstrated by HBL and its team in the last 9 months of COVID. We are moving into a period of coexistence. I think we should learn well from many of the lessons we were taught during this period. I think we should make sure we make many of these things which were good practices we learned into BAU as we go forward, and we continue to practice safety. We continue to support our communities and ensure our clients, our staff remain safe. I wish you all good health, and I wish you the best, and look forward to working with many of you as partners, as colleagues, in exchanging ideas on how to sustain going forward a healthy, prosperous Pakistan, regardless of the events which may come and disrupt our lives. Thank you.
Thank you, Mr. Sageer, for sharing such a lovely details with us. I would like to thank all the participants who have joined in. I would like to share that we are going live internationally right now. Our friends from Bangladesh, Saudi, I can see a couple of my old colleagues and people coming and logging into this session. So, moving forward, next the speech is by Dr. Anayat Hussain, Executive Director, BSG, State Bank of Pakistan. Please welcome Dr. Anayat Hussain. Thank you.
Ladies and gentlemen, Assalamu alaikum and good morning. It is my pleasure to speak today at this 13th International Conference on Mobile Commerce in Pakistan. First, I would like to thank Total Communications for organizing this important conference. I hope that this conference will provide an excellent opportunity to the participants to share their knowledge and expertise. I also need to state a disclaimer at this start that whatever I say in this talk are my personal thoughts and do not necessarily reflect SBP policy stance. Technology these days is impacting each and every aspect of human life, including, of course, financial services. One of the ways it is doing so is through the adoption of artificial intelligence and data sciences. And here I am taking the liberty of including machine learning and robotics as part of AI for ease of discussion. The AI related opportunities across the financial services continue to thrive amid considerable hype around the technology. AI is going to impact not only the financial statements of the banks, but also their operating structures, and thereby bring efficiency while also enhancing the quality of controls. Based on an estimate, the aggregate cost savings for banks from AI applications is estimated around $447 billion by 2023, with the front and middle office accounting for $416 billion of that total. Majority of the large international banks are already implementing AI strategies and have deployed many innovative solutions by doing this. Banks can leverage AI on the front end to smooth customer identification and authentication, thereby deepening customer relationships and providing personalized insights and recommendations. In developed countries, a significant majority of the people don't prefer using brick and mortar banks for anything. The client's customer support expectations have not really changed in terms of what they expect, but how they expect them has significantly evolved. AI has clearly impacted this landscape with AI-enabled chatbots and voice assistants, which have started to become a norm at major international financial institutions. The biometrics like facial and voice recognition are getting increasingly smarter as they intersect with artificial intelligence, which draws upon huge amount of data to fine-tune authentication. These tools have helped banks to improve customer service by allowing customers to open accounts remotely. For the middle office, banks can implement AI-based functions to detect and prevent payment frauds and to improve processes for anti-money laundering and know your customer. Given the large number of transactions taking place through the financial system every day, the number of investigations coupled with the complexity of data and reliance on human intervention makes AML very difficult and expensive work for all the financial institutions. AI-empowered AML solutions can incorporate three key advancements in this respect. First, intelligent segmentation or optimization of the data sifting process to reduce false positive, which is a major drain on the time and energy of AML analysts in a bank. Two, an advanced alert system which auto-categorizes alert priorities. And three, advanced transaction monitoring which uses machine learning to spot suspicious anomalies. These sort of solutions are able to process a large number of data points rather than just the usual 20 or 30 transaction categories which are analyzed in a normal AML solution. And it could result in a massive drop in false positive alerts, as I just mentioned. Cyber frauds are becoming increasingly sophisticated, manipulating identity information through account takeovers, exploiting cloud servers, IP addresses, etc. AI here can also help the banks to counter these by using machine learning on big data and related algorithms in real time. To benefit from AI, banks need a holistic AI strategy that extends across banks' business lines, usable data, partnership with external partners, and well-qualified employees. As opportunities are accompanied by risk, too much reliance on these intelligent systems also exposes financial stability to certain risks. The working of AI can be a mystery for a majority of people in an organization, and resultant lack of adequate and qualified supervision can trigger loss of control, make fatal errors, and have a pro-cyclical effect due to its mechanistic functions. This can be dangerous, particularly in crisis scenarios. An autopilot would not be able to handle the aircraft in emergencies, at least as of now. Nor can algorithms stabilize in period of financial stress. Agile tech companies are driven by an admirable energy and inspiration. By nature, their willingness to take risks is very high. They create an idea, build a prototype, and will like to try out immediately in the real world. Regulatory and supervisory requirements may seem to them unnecessary and may make them extremely uncomfortable. The regulatory bodies understand that there is a need to strike a balance. While we suitably address key concerns like cybersecurity, data privacy, consumer protection, and financial stability, we also don't want to let go key benefits of agility and innovation that are hallmark of tech companies. IT governance and information security nowadays are equally as important as capital and liquidity requirements. This thus requires regulators to constantly review and reassess the prevalent legal and regulatory frameworks, supervisory models, and resources to achieve this balance. In this respect, the State Bank has unveiled a national payment system strategy. This strategy focuses on improving the payment infrastructure, legal and regulatory framework, retail and remittances market, and government payments. The prime objective is to foster growth of digital payments and infrastructure in the country. In this regard, major action items include establishing an automated clearinghouse, micropayment gateway, and digitizing government payments. The establishment of automated clearinghouse and micropayment gateway would enhance number of times the infrastructure capacity to process transactions, and digitization of G2P payments, that is government to persons payments, would substantially increase the level of digitization in the country. We are also confident that once G2P payments are digitized, it will pave the way for digitization of P2P, P2B and B2P payments. State Bank of Pakistan would not, in general, like to interfere with market forces. However, at times, we may try to fine-tune incentive structure in a way as to meet our regulatory objectives. The growth in number of POS machines, point of sale machines, in Pakistan has for a very long time very low as compared to growth in the number of cards, and one of the major reasons was that acquiring business was not attractive enough as compared to issuing business. Resultantly, while we observed a decent growth in number of cards, the number of POS machines remained subdued. In order to improve the number of POS machines and QR touchpoints and incentivize the acquiring business, in January this year, we issued instructions related to fee structure regarding the merchant discount rate, that is MDR. A floor on MDR has been placed with a cap on interchange reimbursement fee for debit cards. Resultantly, not only the footprint of touchpoint has improved, but also new institutions have shown their interest in becoming acquirers. In order to further improve digital payment infrastructure, rules for digital onboarding have also been issued by State Bank, which have enabled the institutions to digitally acquire the merchants without physical interaction. Last year, that is in 2019, with the objective to promote digital payments, foster innovation in payment industry, increase financial inclusion in the country, and most importantly, and I will like to underline it, to enable non-banking entities to play a meaningful role in payment landscape, State Bank introduced a new license category of electronic money institutions, commonly known as EMIs. This will enable small companies to register themselves as EMI and offer innovative and cost-effective, low-value digital payment instruments such as wallets, prepaid cards, and contactless payment instruments. So far, 6 companies have obtained in-principle approval from State Bank of Pakistan to conduct e-money business, and out of these 6 companies, 3 have already graduated to pilot stage. E-money has played a very critical role in digitizing different types of payments in various countries, and we are also observing a very promising start in Pakistan as well. In view of the progress and future plans, mega platforms are also eyeing Pakistan's market for entry. Further, some of the existing institutions in Pakistan are also working towards harnessing the capacity and capabilities to become mega platforms. Hence, we see a bright future for digital financial services in the country, with lot of opportunities that can be harnessed by deploying and investing in technological innovative solutions. In the end, I will again like to thank the Total Communications and organizers to arrange this wonderful conference, and wish all the participants fruitful and productive discussions. Thank you very much.
Thank you so much, Dr. Sam. Thank you so much for, on behalf of the industry, I would like to take an opportunity and thank you and your team at State Bank of Pakistan for all the support that you have given us, bringing us to this level and giving flexible mandates and regulations to perform in the industry. So thank you so very much. Moving forward, I would like to request Federal Secretary, Minister of IT and Telecommunication, Mr. Shoaib Ahmed Siddiqui, our chief guest, to address.
Dear participants, it's a pleasure that Total Communications has asked me to join them in this Mobile Commerce 2020 session, and it gives me pleasure to be with them and with the program which I told has been supported by the PTA chairman and the Governor State Bank of Pakistan. And such is the importance of this event that both these personalities try to make themselves present in the mobile commerce session. As the name communicates, it relates to telecommunication, and ministry is all in all out for promoting telecommunication services in the country under the policy of the government of Pakistan to support the people, to bring them in the telecommunication network, ladies, females, youth, all segments of the society in all areas of Pakistan. And this is empowering them through technology, and this empowerment would bring improvement in their lives and lifestyle. This would lead to employment opportunities. This will lead to self-income generation programs and entrepreneurship, which would ultimately be having an impact on the GDP of the country. So this is the power of mobile technology. And if we pursue friendly policies towards the operators, towards those involved in this business, we would be raising the scale of Pakistan in the international scale of mobile connectivity. Our country is a very populous country, more than 62% youth, very talented females also. So it is necessary that they are involved in socio-economic activity. Mobile commerce activity provides that opportunity to these people, these segments of our society. The government is committed to promote technology and telecommunication, to develop programs for reaching out to people in various areas, in the outskirts also, in the cities, in the rural areas, and for that our Universal Service Fund program is constantly rolling out programs to increase network and provide 3G and 4G connectivities. Work is on for launching of 5G. The PTA already gave testing permissions to 2 mobile operators, and efforts are on that not in distant future we are able to launch 5G, a technology which would revolutionize the mobile commerce and mobile industry also. So, ladies and gentlemen, this occasion is an important opportunity for all of you to understand that you have to reap the benefits of mobile technology. Use it for the good, because unfortunately there are complaints also. Segments of society, children are reportedly using it for things which are undesirable, which are not liked by their family. We have to always look at the positive side of the commodity. Try to make the best use of it, the productive use of it, the right use of a facility. Imagine if there was no mobile, if there was no connectivity, how would we have survived? Remember the time when a letter used to reach Pakistan from UK more than 7-8 days. Now it's only on the click of a button. The connectivity has been developed so much. in the COVID particularly, life would have come to a standstill if there was no mobile commerce, no mobile activity. It is through this that we were able to continue with our functions in health, education and other fields. Under the dynamic leadership of Prime Minister of Pakistan, the ministry is fully committed to promote mobile policy, mobile commerce policy and activities relating to mobile industry. The President of Pakistan is heading the Emerging Technologies Committee. The Minister for IT is all support, is reaching out to Chief Minister and other ministries and organizations to get benefits from the mobile commerce, mobile industry. This is happening, it's unique happening. All top offices are fully engaged in promoting this technology. So we have to value technology and we have to make the best use of it. I wish all success to the organizers of the conference and extend full support to them in their endeavors, and the ministry would not be failing them whenever they would need our support. Thank you very much.
Thank you so much, Mr. Siddiqui, for sharing your thoughts and views with us. Now moving on to our next round of panel discussion. And we have got some really interesting things. That is digital payments, MDR game, merchant acquisition, and lending game. So for this, I would request Fareed Ahmed Khan Saab, CEO of Finca Microfinance Bank, to moderate the panel. And in our panel, we have got Mr. Umar Moin Malik, Group Executive Director, Head of Digital Wallets and Payments Products, Telenor Microfinance Bank. Mr. Dato RF Siddiqui, SEVP, Chief Digital Officer, Faisal Bank Limited. Mr. Javed Yousafidi, Group Head IT, Digital Banking, Silk Bank. And Mr. Yahya Khan, Chief Digital Officer, Group Head, Bank Al Falah Limited. So I would request Mr. Fareed to take up this, and let's see how things are moving in the industry. Thank you.
Ji, assalamu alaikum everyone.
वालेकुम अस्सलाम जी वालेकुम सलाम
Can everyone hear me clearly?
yeah I can hear you
Ji. Shall we begin? Is everyone on board? I guess I can see everyone. So let's start. Gentlemen, welcome to this panel discussion. I have with me Mr. Yahya Khan, who is the Chief Digital Officer of Bank Al Falah, Mr. Javed Eidi, Group Head IT and Digital Banking, Silk Bank, Mr. Omar Moin Malik, Head of Digital Wallets at Telenor Microfinance Bank, and Mr. Dato Arif Siddiqui is the Chief Digital Officer at Faisal Bank Limited. The format of this panel discussion will be that each participant will have a couple of minutes to make an opening statement. You can choose a topic of your choice, and from there onwards, we will go into a discussion amongst the different panel members, and afterwards, we will open the floor to Q&A. So I'll start with Yahya. Do you want to go first?
Right, thank you. So I think I'll just stay with the topic, and the topic is very relevant in the current environment where the digital payments and a lot of hard work has been put in by both banks and the fintech players in accelerating the digital payments over the number of years. And uski importance we also had gone manifold during the COVID environment also. So I think now the question for banks and fintech players is how to make money from digital payments. And the topic I think is very relevant, whether banks and fintech players should look at digital payments as the means to making money itself. Are they tools to cross-sell other banking products and then make money through that? So I look forward to those discussions.
Great, thank you. Mr. Javed Eidi, sir.
Ji, thank you very much, first of all, for inviting me on the elite panel and see a very senior and a very experienced and what you can say, proven professionals, especially in the field of the digital, are sitting here. मेरा सिर्फ एक ही मैं समझूंगा मैं इस चीज़ को आगे अगर लेके चलना चाहूँ कि we need to decipher the relation between the merchant and the banks because हम fintech और banking को तो collaborative efforts तक ले आए हैं लेकिन what we need is now to create the trust of a merchant towards this payment mechanism, whether it is a QR, point of sale, mobile to mobile or whatsoever, जिसमें acquiring भी आ जाती है और आपका MDR भी involve हो जाता है and FBR भी involve हो जाती है because of the taxation and the withholding tax and general sales tax. उस confidence को हमें एक bridge करने की ज़रूरत है. Then we can start making money. That's my belief is. So we would like to see something what you can say happening in between fintech and bank, which is happening very well. But now the handshake with the retailer in a trust form where they can easily select anyone or many and can start doing the business with them without any fear. So this is my
Okay, so you said that we have sort of identified the relationship between the fintechs and the banking industry or the financial institutions. The next nut to crack is how do we decipher the relationship between the merchants and the financial institutions. So you will want to spend some time on that issue. Great. We move forward with Omar. Um, Hi.
Ji, Assalamu alaikum. Um,
Well, Islam.
so I think this is, I think digital payments, again, is a topic that we've been discussing for many years now. But I think in the last 1 year, हम सिर्फ पिछले एक साल को देखें, so there have been plenty of changes. Of course, Yahya mentioned COVID, and COVID was a time period where we saw a big surge in digital payments happening in the industry. I think COVID also served as a very important kind of wake up call for both customers and merchants. Um, and a lot of the merchants we are aware of now actually realize the importance of collecting digital payments as opposed to cash. So cash is the most predominant mechanism in the industry. और वही तो enemy है हमारा, उसी को तो हमने break करना है. So COVID helped a lot over there. एक awareness आ गई कि जी digital payments ज़रूरी हैं और अगर आपको अपना business चालू रखना है तो आपको digital payments की तरफ जाना है. Other than that, I think in the last 1 year, we have seen a lot of positive movements from the regulation side also. So we have like the digital merchant onboarding regulation that's come out. The central bank has currently drafted an IBAN QR की regulation, जो अभी इस पे discussions चल रही हैं. So I think from the regulatory point of view, there are positive moves that have been made also. And then from certain policymakers on the government level, for example, in Punjab, we saw that the GST for digital payments was lowered at certain merchants. We believe similar things are happening in Sindh and other places as well. So we believe that all the players in the value chain are coming together and putting in their efforts to move away from cash towards digital payments, because Pakistan is again way behind the rest of the world. We are too dependent on cash. Everything is happening on cash, and when we have our discussions over here, हमें उस angle से देखना है, how do we move away from cash? So I think this is a very very important time, and the discussions that we have now are very important for shaping up on what's going to happen in the coming years.
Great. Thank you, Wayne. So I move on to the next participant, Dato Arif Siddiqui. Can you please say a few words?
Thank you very much having me here. I'm watching sort of Pakistan since last 1 year, in fact. I spent most of the time outside Pakistan, 18 years. And very happy to see that what is happening at this point of time here in Pakistan. And COVID, definitely, I can see the significantly given chance to the people to try some of the payment things which bank has actually initiated, but never the people used it before. So it's a huge opportunity for Pakistan for the COVID. I can see somewhere around a jump of around 8 to 10% during that period. Whether we can be able to sustain it or not, I'm not sure. But as I'm hearing here, that Pakistan is far behind on a kind of digital payment, which is true. Where I'm coming from, Malaysia, Singapore, and Hong Kong area, where really cash on delivery is just at 10%. So it's a reverse side of the coin in a sense that 80 to 90% here is the cash on delivery, and over there it is only the 10%. So a lot over there is being used other technology like a QR code is working very well over there after China to this Asia Pacific. So I think it's a great to have a discussion here that what we can be able to do this in Pakistan.
Shukriya, Arif Saab. Thank you so much. So I think a couple of common themes and issues that have emerged from these opening statements are that there has been sort of a big bang in the shape of COVID. Definitely, it has offered certain opportunities for us to lift our game, and there has been a marked change in consumer behavior as well. But having said that, we still remain a very largely cash-dominated economy, an undocumented economy, and there is definitely an element of exclusion, digital exclusion, if I may say that, because a lot of a major part of our population doesn't have access to the 3G, 4G networks or the kind of devices that are required to really take this revolution to the next stage. So different stakeholders that we discussed in this first round obviously included the financial institutions, the fintechs, regulators, and at the same time, obviously the consumers and the merchants who all need to play their part in order to ensure that this platform and its adaptability goes up. So coming back to Yaya, as we started a discussion with you, and you mentioned that monetizing these platforms, it remains a challenge. And I would tend to agree with you there that we have yet to discover that magic formula. But when we look at globally also, we find that even very well-established tech companies and firms, have yet to actually make money and break even. They are still consuming cash. So why are we in a rush in Pakistan to monetize this digital platform? Why can't we wait for a couple of more years and ensure that the platform remains cheap, adaptable, and available, so that we have more and more consumers on board, and then maybe afterwards we can think about monetizing it? So, what do you say about that?
Gee, can you hear me okay?
Yaya, are you with us?
Yeah, can you
I'm
hear
sorry,
me?
did you catch my question?
Caught your
Yeah, I can hear
question.
you.
So, okay. So, absolutely. देखें, globally, what you pointed out, payments as a means to doing a purchase is always made as frictionless as possible. And frictionless में दो चीज़ें होती हैं, एक user experience frictionless and दूसरा उसकी price frictionless for the consumer, so that consumers are onboarded onto a digital platform, because the world over the fight is against cash. So once they're onboarded, then it is seen कि अब उनसे पैसे कैसे बनाने. हमने unfortunately in this country, and I think if you look at the cards industry here, डेकेड से हमने कार्ड्स की इंडस्ट्री को, एक्वायरिंग को अलग रखा हुआ है, इशूइंग को अलग रखा हुआ है. एक्वायरिंग की वायबिलिटी हम देखते हैं खाली उनकी एमडीआर इनकम के ऊपर, जो कि एवरेज 1.55-1.6% के ऊपर मार्केट में ऑपरेट करती है. अब उसके अंदर उन्होंने पॉस भी लगानी है, सब कुछ लगानी है, पॉजिटिव पीएनएल भी जनरेट करनी है. हमने कभी भी इस इंडस्ट्री को एज एन एक्विजिशन ऑफ द कस्टमर्स नहीं देखा. अच्छा, इशूइंग अलग रखा हुआ है, वो इशूइंग की फ़ी डेबिट कार्ड इशूइंग से कमाई जाती है. उसके बाद हमने जो फाइनेंसिंग है मर्चेंट की या कंज्यूमर की, उसको बिल्कुल अलग रखा हुआ है. सो इफ़ेक्टिवली वी आर नॉट यूजिंग payments as an acquisition tool at all, at least for the conventional business. I think the opportunity that we all have here is we should keep this payments transactions frictionless for consumers. So consumers should never be charged. All of you must have experienced the surge of emotions that take place when says to you, sir, इसमें 2% extra charge करूँगा क्योंकि आप कार्ड से पेमेंट कर रहे हैं, right? And half of the people at that point of time, if they can go to and withdraw the cash from ATM machine, say अच्छा ठीक है ना charge करो, I'll go and withdraw the cash and pay you in cash. So first of all, that should not be passed on. Merchants, on the other hand, should also not be paying 1.55 or 1.6%, which is why I think the NFC and the QR had a huge promise when it first came in. It was operating at much less, and in some cases zero MDRs when a payment is made, even for the merchant. The world over, it's a few basis points the merchant pays, और उसकी justification ये होती है कि merchant की क्योंकि product बिक रही होती है, so he's okay to pay 7, 8, 9, 10 basis points on that, not 150, 160 basis points. And the trick that I think, and I know that some of the digital leaders here subscribe to that view, that the trick is that we acquire those customers. On the basis of that, we lend to the merchants, जो हमने merchants जिनकी digital payments हो रही हैं on a certain loan to value. We lend to the consumers because we now have the payments behavior there. Take money from the merchants float, and in some cases from the customers float. So what I've said in so many words is that I don't see digital payments to be an MDR game at all. It should not be an MDR game. It should be viewed as acquiring customers, as you also said, the world over the practices, using their payments behavior to cross-sell other products such as merchant and consumer financing and merchant and consumer floats.
Okay. And this financing should be done within the same ecosystem, or you can have, again, partnerships that can help you achieve that and provide us a different sort of vertical to the customer?
Absolutely. You can have partnerships. I mean, fintech players either don't have a banking or don't have a lending license if they're not an NBFI or have a license from the central bank. Or often they may have all of it but may not have a balance sheet. So the payments players, such as fintechs in this example, can get all of that data, can make some money of their own by selling value-added reporting to the merchant. Very important. I missed out on the first part because they are providing a platform and they can provide the kind of reporting which is merchants like you also do this reporting. So they can make money out of it. And then for balance sheet products, they can partner with a bank.
Absolutely, absolutely. Becomes a win-win for everybody in this scenario. Thank you, Yaya. Moving on, Javed Saab, your opening statement mentioned deciphering the relationship between merchants and the financial institutions. So, why is this becoming a sort of a tough nut to crack? I mean, in our part of the world, we see, because of our addiction to cash and because a large part of our economy is also undocumented, बहुत सारी considerations आ जाती हैं, taxation and similar issues, where which makes merchants less enthusiastic about adopting these digital modes. How do we overcome this challenge? How can we entice merchants to adopt this?
Actually, I have done a complete research on this area when I was establishing a DigiSilk wallet platform, and we were very much gung-ho to come up with the QR network, and for the acquiring part, maybe starting closed loop, then we can plug in other banks and fintech players, which is very, very easy when it comes to the local acquiring. So the model was ready. We tried it out with a few merchants, with our alliances. We come to know two things which are their main issue. First of all, they are afraid of talking with the bank because of large numbers of paperworks involved. And most of the time, when you go for a merchant account is not dependent on the CNIC of the person, but on the company paper, utility bill, and all these things. For example, my wife went to the shop and purchased certain thing, and all of a sudden, when I received the SMS, it was of some A-end company private limited. Then I realized, okay, what is this? and it was one of the leading brand of shoes and the purse operating out of the best mall in Karachi, and I received the point of sale merchant name XYZ Private Limited. So people are afraid of exposing these things, and it's difficult to open the merchant accounts also. Number one. Number two, there is a religious factor also. The small second tier, third tier mom and pop shops and the Karyana stores, they have the issue of banking account. Most of them, they don't believe in banking account. They believe in Islamic banking account. So this is another challenge to crack. The third one is again, if we go and do the documented, then the money will come into our account. Then we have to write the check, which is a difficult part. We have to get it in a form of a pay order, which was initially. Now you can get it online. They are not interested in using the online app. They just need the money and at the comfort of their business, because they are doing the business. So their focus is business, and very rightly, because they have very a few hours to do the business, and they are not here to do the, what you can say, deciphering the relation with the banks and FBR and other sales tax regimes and all these things. So I think regulators have done a wonderful job by coming up with the digital merchant account, where they don't need anything except what you can say CNIC and the biometric verified. But we also need to get confidence by the revenue collecting agencies to them in writing, like a tax holiday for next 5 years for no question asked, nothing. You have this much ceiling, then you will never ever be asked for life. Up to this amount, you can do the transactions. So this is still not inculcated into the merchants, and they are not aware of this. This is my belief. But Omar and Yaya, they are deeply entrenched in these business. They can put more light on it. These are the three things which I felt and I come across.
No, thank you so much. We'll definitely ask this question from Umar and Yahya. But you also mentioned about developing an ecosystem of QR payments, and why have QR payments not taken off in our market, if I may ask you? I mean, we have competing platforms. You have the traditional POS machines. Then we have QR codes, and then we have the NFC channel also, which is hardly utilized in our country, although globally it's becoming quite popular. So within these platforms, the POS still rules. QR, although now we see them here and there, but they have not taken off. Why do you think that's what's the reason?
Two issues. We have issued QR code through a payment scheme under its infancy stage, when we were not able to decipher, what you can say, address the single message transaction issues, the reversals, void, sale, purchase issues, which now they are working on it, and they have come up with this. So initially, if the money is gone and I'm not giving you the, what you can say, the commodity, what you will do? You have no way to claim. Your money is gone. The confidence of the merchant and confidence of the end user both is shattered, especially in the QR case. Until unless he is working with a bank, using a bank's terminal, a bank's app, a bank's QR, then he is confident that I can talk with them and he has a relation with that bank. If somebody walks in and opens the Easy Paisa account or a Finca account, because I know I've discussed a lot of times with the Kasif on these issues, that relationship we made digitally, and our relationships were very fragile and are very limited because we don't have the right user cases. But when it comes to the transaction dispute handling, they don't have any clue. Even most of the educated people don't have any clue what to do if my transaction is what you can say disputed. From where I'll get the charge back? What will happen? Who is responsible for what? So these are the challenges which needs to be addressed. But in a pause, we have gone through the phase of understanding. I was the one who started ATM in MCB when we used to put the ATM in MCB in 90s. The people used to say, no, we don't want ATM card because our money is safe in the bank. But within 3 years' time, we have seen the change in paradigm shift total, because people understand that to carry the cash from point A to point B is an hassle, during on the salary day and keeping it under the what you can say the mattress, and at the time of the payment you have to go another next time to the bank. So once the confidence is there, now people even don't care about the receipt. They just take the money, and the receipt is almost dangling over there. If you can see, most of the time, the dustbin, ATM, how vestibules have become a dustbin of the what you can say slips, and mostly didn't touch by the customers. So these are the level of confidence which we have to bring in for the QR. POS, I know POS is a physical device sitting over there. Some merchant is sitting there. I can come back and say, okay, you have used my card on this. In QR, something I am doing, something you are doing, khali wali. So उसके लिए बड़ा कॉन्फिडेंस चाहिए उस चीज को करने के लिए, जो मेरा है, और उसमें आपको एतमाद भी होता है कि आपकी सब डबल होती है ट्रांजैक्शन, सिंगल पास नहीं होती है, एसएमएस नहीं है, पीपल विल गो इनटू इट. बट उसके लिए जो काम कर रहे हैं जैसे इजी पैसा और अल्फा एंड द टीम एंड जैज दे एंड यू फिनका, आई थिंक आप तो अब किसी और उसमें ज्यादा इन्वॉल्व हो गए, लेकिन these three players are the major player and they are doing a phenomenal job in creating the market. But these are the right people to answer my questions from the consider me as a customer, and I have to hear from the experts who are already facing these challenges.
No, thank you, Javed. So let's move on to Umar. Then this challenge of encouraging merchants who still prefer cash, and Umar ne, I think opening up the statement में कहा था कि our fight is with cash. So what should be done, or what can we do to bring merchants over to the digital payment mode? What policy changes, behavioral changes, or inducements, sweeteners do we need to give to ensure that this process continues? And we have seen the progress being made during the past 6-7 months, and it happened out of compulsion, it happened out of a need, and hopefully we should be able to carry forward this momentum. So, Umar, any words to say about this?
Thank you, Ji. So it's a very pertinent question, and I think यही वो magic question है जिसको हम लोग सब answer करने की कोशिश कर रहे हैं for many years. Unfortunately, I think the responsibility doesn't lie with one player or one industry only. Multiple stakeholders in the value chain have to come together if you really want to move away from cash and towards digital payments. So आज क्यों नहीं करते हैं? देखिए मैं आपको एग्जांपल देता हूँ. If I walk into Al Fateh also or any other big store जहाँ पे आपकी कार्ड machines पड़ी हुई होती हैं, so the merchant, even if I have a card today, the merchant doesn't prefer digital payments. So he's okay with cash, he's okay with digital payments. वहाँ से कोई उनकी preference नहीं है. For the customer also, if I have cash in my wallet, and that's a big if now, especially after COVID and everything. If I have cash in my wallet, I'll pay with cash. If I don't have cash, I'll pay with card. So customer के लिए भी कोई preference नहीं है, कोई incentive नहीं है कि मैं A prefer करूँ या B prefer करूँ. Merchants जहाँ पे POS machines लगी है, वहाँ वो merchants का total तादाद जो है वो है ही कम. So जहाँ पे हम कहते हैं जी 2 million, 3 million हमारे fixed structure merchants and we only have 25,000 POS machines out there in the market. Look at our neighbor Iran. The number of POS machines that they've deployed is I think 2.5 million plus. That's probably more than what the merchants that we have in Pakistan. So हमें multiple angles पे काम करना है जी. Taxation is a big issue. One of the main reasons why merchants don't want to move towards digital payments. Documentation हो जाएगी, फिर taxation होना शुरू हो जाएगी, etc., etc. So Javed Saab mentioned that that's a real fear factor that we have to overcome and address. The policy makers and the central bank, they have to really sit down and crack that one out. On the regulation side, sure, we have some way forward in terms of merchant onboarding, digital merchant onboarding for individual and sole proprietors. But what about अगर मैं आज अल फतेह स्टोर को ऑनबोर्ड करना चाहता हूँ या मैकडॉनल्ड्स को करना चाहता हूँ, तो वो जो onboarding का पूरा process है, and not just my bank but all the other banks and all the वो प्रोसेस इतना लेंथी है, इतना टाइम कंज्यूमिंग है, that merchants just really don't want to go down that path also. And you can compare this to, say, the online sites like PayPal or Payoneer, where a merchant can go and with a simple few clicks they get an account open and they can start collecting payments. So I think हमने अपना उसको tiered KYC में हमने उसको नहीं लेके गए में merchant onboarding को. हम लोग उसका एक झटका तरीका एक रेगुलेशन है और उसको पूरे इंडस्ट्री फॉलो कर रही है. And if you want to come on board, regardless if you only want to collect 10 rupees of payments, you have to go through a very, very extensive list of documentation that you have to provide. So ये challenges हैं. I think ये हमें ठीक करने वाले हैं. I think Javed साहब ने QR की बात की and the fact that we are too reliant on maybe international payment scheme QRs, और उन्होंने rightly mention किया कि the QR as a payment transaction instrument is maybe not at par with, say, POS machines or other advanced payment instruments, but that is where we are stuck also, kind of, you know. So international payment schemes का QR एक तो वो business sense नहीं बनता. I would love to have, you know, my colleagues from other banks look at the overall business case on QR payments. But for Easy Paisa, for example, when we are working with MasterPass QR, it's a loss proposition for us. Secondly, उनने जिस तरह merchant acquisition की है, that was probably not the right approach, because you have to actually do it very gradually, keeping in mind where your customers are. आपका सवाल था QR के ऊपर transactions क्यों नहीं होती हैं? मेरा सवाल ये है कि टोटल इंडस्ट्री में कितने लोग हैं जिनके पास एक स्मार्टफोन है, जिसके ऊपर हमने एक ऐप लगाया हुआ है जो QR से पेमेंट कर सकता है. जब वो नंबर ही कोई तकरीबन 4 मिलियन है या 5 मिलियन है पूरे पाकिस्तान में. So I think it's evident to us कि यार chicken and egg में सबसे पहली चीज पे focus करना चाहिए, because when you go and onboard merchants and no customers are coming in over there to make payments, so merchant ने eventually QR code उठा के दराज में डाल देना है. He's not going to use that as a payment instrument. So I think these are the issues and challenges that we all need to solve.
Thank you, Umar. Thank you for elaborating this. And आपने फिर जो merchant onboarding और की बात की और the difficulties और जो cumbersome process बताया. I mean, on the other side, you know, digital account opening is for consumers is also quite challenging. हालांकि अब with the changes happening, especially जो Roshan Pakistan account है for expats, the government has broken through a lot of barriers here. The government and the central bank, and as well as the banking sector. So, how could we leverage on that experience? And I would like to ask this from Dr. Arif Siddiqui Saab. He represents a large bank here. That how can the banks create an easy digital account opening experience for consumers? ये हम barrier कैसे break कर सकते हैं on the consumer side?
So, can you hear me?
Yes, we can.
Hello.
Gigi Arif Saab, please go ahead.
So that is the 21% of the total adults are having it. So the most important thing, even the payments comes later. Before that for financial industry, I'm talking about only. It is very important that we should encourage people to open an account. Some of the bank did well, in fact, and some are not. But the most important thing, how we can be able to give a very seamless experience to the customer for account opening, or I can say call it digital account opening. I think something recently happened which I see a very significant impact can play this called non-resident Pakistani digital account. A state bank came up with the first time that without coming to the branch, this is possible that someone can be able to open an account. Now, my view is that looking into the Asan account and others, if we can be able to make little bit more easier for the customer, that they can be able to digitally open the account, probably this will increase more people to open account. That is the first thing. You know that in Pakistan, cash is the king, and the people are doing more transaction through the cash, and some are even the bank. So it is role of the bank also, I feel, that to create easiness for the customer, educate customer, and train customer how they can be able to open account and create something like see, bank always looks to the margin. My view is that people who are coming with the less deposit, they should start thinking about, and I can see in Pakistan, and very encouraging.
Sorry, Arif Saab, we've lost you. I can't hear you. Arif Saab, can you hear me? Is anyone else on the panel able to hear Arif Saab?
I
No,
can
I'm
hear
not
you
able to hear
clearly.
him either.
It's
No, I think he probably lost connection or Arif Saab, we'll keep trying you. अगर आप दोबारा connect हो जाते हैं, so we'll just pick it up from there. Hello, Arif Saab, are you back? Okay, I'll just move on with the next question. We don't have much time actually. We are running a little late, and
Yeah,
we
I
need to
came
wrap up.
back.
Oh, you came back. Please finish your answer. Sorry, we lost you there. Yeah, Arif Saab, please
I
continue.
think you can keep going because my network is not supporting me. So you can keep going if you are not hearing me, or you can continue with the others, in fact.
No, you are fine now. You are fine now. Please, if you can finish your answer.
Yeah, so in fact, I know some of the people here, and they are from the financial industry. I'm a big fan of that, how we can be able to create a digital financial inclusion in the country. And I'm coming from a countries where the financial inclusion is somewhere above 90%. And over there the payment is a big success, and of course by doing that I saw huge successes on a fintech as well. And as we were talking about the profitability, like Grab is the one of the case, a huge success in that market. Even the Lazada is doing now very well. So it is all about that, how many people are using digital media to for the payment. And until unless the banks are not coming up and giving a lot of easy way to open account, and the financial inclusion is not happening, digital financial inclusion and thereafter the payment will not grow in Pakistan. So I always say that in Pakistan, my take up is that how we can make the easy onboarding for the customers.
Shukriya, Arif Saab. Thank you so much. So before we conclude, just one quick question, and I would like all participants to just share their views on this one. Couple of sentences each. One element that we have also talked about is the trust between different parties, and from consumer as well as merchants. People are not satisfied, comfortable in using online transaction methods. There's a fear of hacking and data security risk. And there have been incidences also. How can we get this trust from the customer as well as from the merchants into this digital game? So very quickly, I know, what's your view, Yaya? If we start from you, how can this trust be established between different stakeholders and players, including government and tax collecting agencies, in this for quick adoption of digital platform? So trust issues between different stakeholders, how can those be addressed? If you have any comments on those, yeah.
Trust follows need. If there is no need, nobody wants to use it, forget about trust, right? So trust comes after the need has been established. We have seen, relatively speaking, a greater conversion of transactions for online payments for a $3 billion industry. 10-12% of those transactions have been moved to prepayments versus a $125 billion industry, which is a retail industry, जिसमें अभी we have spent the last half an hour debating कि QR की uptake नहीं हो रही. So first there has to be need, then people would think about वो need है तो अब trust को देख लें. For trust, all stakeholders have to come together to establish this. Obviously, central banks do their bit, banks do their bits. What we haven't talked much about lately is the importance of telcos in establishing this trust. Reflect on it. All our financial services industry works on and validates on the SIM. Your OTPs go on SIM for conducting a financial transaction. Your transaction confirmations go on the SIM. So this one industry, I think we need to include within the fold of the financial services to improve trust.
No, that's an excellent thought. Thank you so much. Javed?
Happily, Yaya have summarized very well, and I think we all are on the same page. I have just ignited the thing which is in the initial stage, and I'm glad I'm on the right track. Now it's a top-down approach. Need is the mother of all invention. Need must be there. If we can create the need, for example, electricity bill, or sorry, utility bills, you can see the need was there, and now it's mushrooming. Then 12 utility bill payment companies mushrooming across the country and collecting the bills on behalf of them. And now it will become a convergence, and then it will become a elasticity, and then the price and the service dynamics will start playing the role. So we might end up India model. We might end up paying to the people whose bill are being on my app or their app. This will reverse. The game will reverse. So need is important first. And once the need is there, then there is a need of a top-down approach. The regulators, telcos, banks, and revenue collection agencies, income tax, they have to be on the same page, coming up with a proper, what you can say, legal document for everyone in terms of the protection, so that nobody can be bothered and everybody can be on the same page with a proper media campaign.
Right. That's good. Yes. And Umar, any final words from you?
I think Yaya and Javed Saab summed it up very well, Ji. I mean, what they're calling need, I would probably refer to as value, because आपके customers और आपके merchants आपकी service नहीं इस्तेमाल करेंगे जब तक उनको value नजर नहीं आ रही होगी. और अगर उनको value नजर आ रही है, तो फिर वो lead करेगा और trust build वहीं पे होगा. यार, over time when they start doing transactions again and again. But I totally agree with Javed Saab when he said that, we have a lot of other areas. Policymakers need to work on a lot of other areas to encourage payments also. आज online payments के ऊपर भी आया ने बिल्कुल बात की कि yeah, of course they are growing. But one of the major issues over here in online, any online transaction is कि customer complaint redressal mechanisms कुछ भी नहीं है. So we if you have a problem with the bank, you can go to the banking muhtasib. You have a problem with the telcos, you go to the PTA and log your complaint over there. If I buy something from Daraz and I get a broken product, who do I complain to? So to build trust, there are other elements that policymakers need to start working on and focusing towards also. आपके कस्टमर grievances को कैसे resolve करना है, complaints और disputes को कैसे resolve करना है, who is authorized to have digital payments and who is not. In the Dubai जैसे शहर के अंदर, you can't just go and put up an e-commerce store overnight. You actually have to apply to the government, and the government will take a week or 2 weeks to actually go through your documentation and then approve. कि हाँ यार, you are now a legit entity to accept online payments. I think there's a lot of work that needs to be done in this front to build trust on the customer side and on the merchant side as well.
Thank you, Umar. No, definitely. And Dato Arif, your views on this issue? Um, I think he's again having some connectivity problems. So, nevertheless, let's. I just want to wrap it up because we are running short of time. Thank you so much, everybody, for joining for this panel session today. Yahya, Javed, Umar, Dato Arif, thanks a lot for joining in on all our audience and participants who joined us virtually today. Thank you so much for sharing your views, gentlemen. And I'm signing off from this panel discussion and back to Total Communications. Over to you. Thank you so much. Dafis.
Thank you so much, all the panelists. Thank you, Mr. Fareed, Omar, Javed Saab, Dato Saab, uh, Yahya. It was quite learning from you guys, as always. Now, before moving out to the break, I just wanted to highlight that more of interesting things are coming up, including tokenization for the mobile channels and mobile banking part. There are 2 fireside chats on data sciences, harnessing the opportunities to collaboration between banks, fintechs, new regime licenses, and mega platforms. And few of the international players would be talking, and it would be a great learning. So I would request everyone to have a quick break. Let's join back within next 20 minutes, and then we'll have some exciting things for you coming up. Thank you so much. We'll see you soon. thank you everyone for joining back and staying with us. As I said earlier, that we have some really exciting things coming in. We will be talking about tokenization, in international practices, what's been done, and now I would like to take you to our fireside chat, where the topic would be harnessing the opportunity to collaborations between banks, fintechs, new license players, and mega platforms. So for this segment, I would request Mr. Kasif Shahid, co-founder and CEO of Finja, Mr. Amar Ikhlas, head of digital ecosystem and channels, Faisal Bank Limited, and Mr. Adnan Ali, Chief Executive Officer of Avanza Premium Payment Services. So I'll hand it over to you guys, please.
Okay.
Thank you, Adnan.
Good afternoon, everyone. Thank you, and good afternoon, Amar, Adnan. How are you? Nice to meet you. We've got a
Thank you,
wonderful
Kasif. Thank
topic.
you.
The topic is, thank you. The topic is, fintech bank partnerships and how it's going to change the future. And what's happened is that because of COVID-19, humanity is going through a siege as we navigate this pandemic. And the thing is that the businesses in most markets, including Pakistan, and the individuals, the customers, the personal users and the business, both of them have started to demand a new level of digitization to operate their lives and to operate their businesses. And what's happened is that the banks, the incumbents, are now feeling the pressure to go out and create those services. And guess what? The platforms and large banks are very slow in creating those services, and the service can only now be quickly brought to market through fintech and bank collaborations, and that's what's happening everywhere. And that's the fastest way to go out and fill that real void that has arrived because of the COVID. So that's the backdrop. With that, I open the conversation. We've thought about a few important questions that we would ask each other. That's how we use the time effectively. So over to you, Adnan. Go ahead.
Yeah, sure. Basically, pandemic has, of course, changed the world with a deeper impact, and same is the case with financial industry. And what we believe that once in Pakistan things have started to open up and we have already lifted lockdown. So what I can see that the banks are very eager to have partnerships with companies like us, and they have rightly in a situation, and they believe that they have changed the banking. They have to introduce more and more services for customers to to transactions. And what I have seen that in a 1 month space time, we are going to sign at least 2 3 new banks in our ambit. So I can see a lot of changes in banks, and banks are opening up, and they have changed the mindset, and they are far more aggressive. And I see a lot of potential for companies like us after the pandemic, who are specifically working in the digital space. So, what is your take, Amar? How do you see after pandemic, and how do you see the collaboration between fintechs and banks?
Thanks, Adnan. Look, definitely the pandemics opened up a few closed minds. The public has reacted very well to adoption of digital channels, and one of the key things that we used to see when the adoption was happening was once the pandemic is over, people are going to go back to branches or go back to the conventional methods. But that hasn't been the case. Now, with the what we've observed overall, and I'm sure it's true for others, we've seen a growth of, let's say, 10%, and after the difference has just been maybe 1%. So only 1% must have gone back. So that shows a clear adoption which COVID has resulted in into digital. Now, having said that, once we saw what was happening and the adoption was up, it was a very clear sign that we need to see how we can collaborate with other players who are also moving faster, maybe faster than the banks in this space. So that's where the need to explore came, and I think that need to a realization that we have serious players out there which can help us offer services to our customers much if we were to build them ourselves. Plus, the other aspect that we were talking about before this, and I'll just bring that here, the entire regulatory regime change with the EMI licenses and the PSO PSP licenses coming in give a very good comfort to the bank when it comes to partnership. So I think that's also added a
Absolutely
lot
right.
in opening up the mindset of the banks and enabling them to partner.
Just like to, I believe with your answer, there is another question, which is I feel that there is a perception or maybe an image that banks are usually conservative and skeptical about partnering with fintechs, right? So I know Faisal Bank in partnership with apps as well as they are partnering with Finja as well. So what are the key things you assess in a fintech for partnerships? So as a banker, Amar.
Look, we look at yeah. Can you hear me?
Yes, Amar. Yes.
Hello.
Yes.
Yeah, yeah.
Yes, Amar. You are
So
audible. You are audible.
we look
Yes.
for we primarily look for two things. One is that does the fintech help us bring something new to our customers, which they are not getting right now, or something that we probably have to give them later on, and it's going to take us much more time to do. So that's one of the things. The other thing is it something which would which would end up into a revenue proposition, not immediately, obviously that's not the thing, but over a long period as a relationship, can we make it profitable? So our view on bringing in partners, especially on the fintech and the enabling the ecosystem side, is more of a view of a how corporate bankers would look at a client from the very start. So taking a customer who's just setting up a textile unit, taking him forward, getting all of those things, supporting him throughout the journey, then eventually leading some big consolidations and things like that. So it's a very relationship oriented view that we have. So we look at that and we see how this relationship will progress in the future.
Uh, you're absolutely right, Amar. And earlier I also served banking industry, and I was the chief digital officer in one of the banks in Pakistan. So what I also realized that while for partnerships, bank also assess that the team and the banking experience of fintechs as well, right? You've also worked in fintech. Kasib also worked in banking industry, and myself. So we having a banking experience and then coming and joining fintechs and resolving industry problems, that gives confidence to the bank, as well as if you're getting EMI license or PSO PSP license, so that gives additional strength to the to the company, that the company whom bank is partnering is a right company and they've got been approved by central bank. So that also gives bit edge to such startups like us or Kasif. What do you say, Kasif?
Absolutely, absolutely. Dekho, we need to be very aware and listen to the fact creating partnerships for banks is not a natural thing that comes to banks or senior leaders at the bank. And
Absolutely.
the reason is very simple, that value, they that store value, then they grow it, they protect it, they nurture it, they invest it. and all of that. And when a fintech partnership comes in, it's effectively saying out and outsource parts of customer relationship or parts of the transaction. Now when that happens, there is a confidence loss, because the bank structurally is built around confidentiality and security and all of those things. So now anyone in the bank, we need to understand that in the value chain, can come in and say no to the collaboration, right? So that's the nature of the bank. Anyone can say no, and when they say no, the partnership kind of collapses. So then how can you go out and collaborate from a banking platform? You need a two-prong approach, in my view. The first is that it's the leadership, it's the CEO and the board. If the CEO and the board are going to go out and this new paradigm where the banks multiple partnership companies much smaller than them, it's not happening. And the thing is that the CEO and the board don't have digital orientation in most cases, because they come from another world. So I would encourage the state bank to go out and make sure banks, their CEOs and their boards go for a 1 week live-in training to MIT, Harvard, or whatever catches their fancy, and get the basics going. And if every has a training budget, a part of that budget has to be spent on creating digital orientation at the board and at the C level. That's number one, if you're serious about partnerships. Number two, the digital head in the bank is actually the collaboration head. He's the front end of the part. He's going to go out and bring those fintech collaborations to the CEO, who's then going to kick the ball and score the goal. So the CEO and the board can't do anything till the time where digital head, that is an entrepreneur, he's in the organization, build consensus, he's going to build collaborative business cases, he's going to drive that collaboration agenda inside the bank, and then eventually allow the seat to sign off. So it's a tag team, and it won't happen in banks which don't have these two breeds. And we are beginning to see, look, I mean, Finja is partnering with multiple banks, and the only areas where we are going to have functional, meaningful relationships are where the digital head is operating, like I'm saying, and where the burden of shift to collaboration is actually shouldered by the CEO and nobody less, and the board supports them. Because it's tough to go out and do this new type of play for banks.
So, Kasif, as you said, it is tough, and I'm sure Amar would also agree to this. It's tough to partner with fintechs or take initiatives, and sell something which has not been done previously. If you are trying to introduce some new product or new ideas, it has to be difficult, to convince compliance, risk, and operation people. It's not simple. Everybody knows that, right? So, so is it maybe so the mindset is it because fintechs are considered as competitors to the bank? Is that the mindset which is hurting the partnership or the sort of collaboration which should have been adopted up till now? So is it because of that, or what
That's
as fintech? What
a
I believe that we are here to support banks, right? We are here to resolve and customers to have user experiences, right? We never think that banks are a competitor. We are looking towards bank to have partnerships with us and work together for the improvement of the industry. So Amar, I'd like to discuss with you, which is a very important point. That is it really partnership or a competition?
It's an interesting point, Adnan. Look, I think I've seen both, right? So I've seen
Yes.
both viewed
Yeah.
in various banks, and I think removing the thing about fintechs as a competition is easy. and it's, and then shifting them to understand that this is a partnership can be done. It's basically the fear of the unknown kind of thing. So I think the first time a bank made a loan to a new industry would probably have been the same thing when it came to the risk officers and the compliance guys. So this is a new paradigm, and I think it's a learning process for the bank. So I think when a bank has done one collaboration, the second one just becomes very easy. And also, I think that now the licenses are there and all of those things are sorted, it just becomes very easy for these guys to understand.
Kasif, since you are one of the leaders of fintechs in Pakistan, so what's your take about that? How do you say it? Are you really here to banking and move to banking away or what?
Yeah. Question, and till that's not sorted out in banks' minds, the collaboration of. But the fintech bank partnership is about one thing in my mind, and that's about exponentially growing the pie. Okay, when banks go
Yes.
out and operate the way they are operating, look what we got. I mean, we've got 60, 70 years in emerging markets, certain amount of accounts with very little transactions, and the banks continue to go that way. Pakistan would not bank for another 50 years. What's that? So what do you want? What you with organizations that are much smaller than you, with strengths, and then you, as a consequence of that partnership, you exponentially grow the pie. You grow the out of the new pie, which was never for you give a small part to your fintech. The fintech partner fails to grow the pie, gets anything. So I think the banks must go and fundamentally answer this question about fundamentally growing the pie, and out of that growth you share the winning. Right? If there is no growth, there are no winning. So that's the basis of this new world order, which
Kasif, you are having lagging. Omar, can you hear him well?
With a bit of a lag.
Yes. Yes. Sure. Can you repeat, please? Can you speak, Kasif?
Oh, you want to say? You want me to repeat myself?
The
Sure.
last
Yeah.
part.
So was that tip only gives fruit to the fact if fintech and the bank partnership has created new value. If there's no new value, the fintech would not get any revenue or net income. So the partnership will only be fruitful for the smaller partner if it can allow the bigger partner to grow further. If there is no growth, there are no payouts and no gains. So the fintechs can't win till the bank becomes bigger. Now the question is that what if the fintechs can start to play bank's territory? I mean, that only happens if the fintech is unable to grow, right? So if the fintech growing through collaboration, it's about growing the pie. Uh, and people that have seen how the smartphones have become pervasive can see the same trends. That's what the platform did to the apps, is what the fintechs can do to the banks. So now we have to be very smart to read these trends, really. And I worry a lot about banks that continue to think that fintechs are going to be their competition, because that is going to be the fastest way to run any
Kasif,
ground.
I seriously think that, of course, fintechs are not going to threaten banks. Banks offer retail banking, consumer banking, commercial banking, wholesale banking, lending, all sort of treasury bank activities. They offer lots of services, right? And fintechs like you and us are working in a particular domain. It's not like we are not offering all set of services, banking services, and even not in Europe, not in UK, not in West. Monzo, SME banking, right? And they have done well in
Yeah.
UK and in Europe. Now, still they can't get the banks like City. The valuation of Monzo is around 1 2 billion. A very famous digital, a challenger bank, so-called challenger. Gold is around $5 billion. So you think the bank will own $10 a year can disrupt and obviously or Barclays or in Pakistan, and we've seen worldwide that banks are also investing into the fintechs, and in Germany, very famous door bank, digital banks, banking. So I think they are here to complement each other. Since we work in a smaller space and we are why if we want to support of banks, we can really enlarge the industry for the betterment of customers.
Yes. Look, I just want you to read something to you. This is news from today, 14th September, and it says UK banks sign fintech pledge. So some of the UK's
Yeah.
banks have signed a government-backed pledge to improve collaboration with fintechs. And you know why UK banks are doing it? Because they're saying that UK is arguably the top place for any fintechs to come in and do business because the banks and but for UK to retain that position, the banks are coming together and saying that we will have a lending page and we'll have a point of contact, and coming onto that lending page, you'd be able to consume the bank's APIs and collect with banks, and they've given us a timeline. And this is imperative
Okay.
for UK to continue to be in position number one. So, it's being now a status quo where the banks are starting to come together and create consortium so that they have standards that the smaller companies can follow to collaborate. It's the writing is on the wall as far as
Okay. Okay.
fintech
Okay.
bank collaborations are concerned.
Okay.
Good.
And
I think we may be running out of time. How much time? Is there a time check?
I'm not sure. Someone from
Okay.
Total
I think someone will
Communication
tell
can
us to.
No. Yeah. Go on,
so
Adnan. Go on. Use
keep
the
talking,
time,
right?
please.
Keep talking. So
Yeah.
Kasim and Ammar, all three of us have been fortunate enough to work in bank as well as fintech, right? Ammar is again back to the banking industry. So how's been so what's the difference? How's been the experience? Kasif like more than 20 years in banking, Ammar spending 15 years in banking and then going he started fintech and then coming back to the bank. So what's the difference you guys feel between banks and working in a bank and a fintech? It's a bit informal, another is tightly regulated and very formal, suited, booted, sort of digital ad. You gotta be.
Amar, you go. Batao.
Yeah, look, I've always had the I've been fortunate enough to be working in banks under leaders are visionary in nature when it comes to digital, and they
Yeah.
are they don't have those issues when it comes to wearing a suit and tie and all of that. So I don't I I think I'm generally hardly ever in a suit, but only when the occasion demands. Uh, but
Yeah,
uh,
for
uh, but having said that, I think my journey from bank to fintech to bank, it's not the first one. I've actually done this before also. So fintech to
Yeah.
bank
Okay.
to start to bank. I think for me personally, it's about the challenge. And I did something in one bank. I joined a fintech. I did something for them. Then I came back into banking because I think I can do a lot more uh, banking space in growing the ecosystem digitally, whether it's
Perfect.
for the bank's internal customer or for the external partners. And I think nowadays is the time
Absolutely.
to really join and create a fintech enablement
Right
platform,
partnerships.
so to say.
Yes.
Yeah.
Yeah.
So that's what
So Kasif, yeah.
we're doing.
Yeah, Mark,
Hmm.
complete. You can. So Kasif, so what do you say, Kasif?
I dekho, the thing is that banks are to me they're rule making machines. Okay, so like Rakaposhi Peak is a cloud maker. Clouds are made by the Rakaposhi Peak. Rules are made in the banks. To the point that I always say that anyone can come in bank, and then nobody can take that rule out. So the banking is about SLAs and things in the rule book to sort of ring fence the value around core value. So, and that's just the nature of the organization. And fintechs on the other side
With the
trying to
mindset. It's go with
unlock
the mindset.
value by 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 removing these unnecessary rules one at a time. So in a way, they're very different to each other. In a fintech, you would build a product, and then you'll start testing it well before its final form. In a bank, committees that would off on everything till perfection arrives, right? So ev- everything that you look at, bless you, Omar, everything that you look at in a fintech and a bank, would operate with a very different approach, really. And that's the
Yes,
value
I
is.
think
If the fintech and banks were alike, the partnership wouldn't create that value.
you're absolutely right. That approach is the main difference between bank and a fintech. When you are working in a bank, so there are other divisions, or maybe there are so many committees, ManCom, IT steering committee, and you have to, as a digital head or maybe payment system head, you have to go there and convince all these people, right? And I still remember the lovely questions, right? For instance, को अगर digital onboarding करनी है, so for a risk guy, उसको नहीं समझ आता कि ये ऑनबोर्डिंग विदाउट मीटिंग अ कस्टमर कैसे करेंगे आप. सो ये चीजें थोड़ा टफ रहती हैं. एंड व्हाइल वर्किंग इन अ फिनटेक, so you've got progressive board, since they understand what is digital and why it is so important to the economy and the industry, तो वो ज़्यादा supportive है in comparison to banks board maybe, right? And then आपका जो अपना विद इन फिनटेक कंप्लायंस रिस्क एंड ऑपरेशंस है, वो उनका माइंडसेट भी डिफरेंट है. इट्स लाइक अ टिपिकल माइंडसेट ऑफ ऑपरेशन और रिस्क गाय, सिंस they look things in a different perspective. उनको ये आइडिया है कि मुझे कंप्लायंस को या रिस्क को इस सेंस में देखना है कि आई बिल्ड रेगुलेशन, आई लुक आफ्टर रिस्क, बट आई हैव टू मेक श्योर कि प्रोडक्ट किल नहीं होना चाहिए, should not be killed. So that's a major difference, I believe, while working in a bank and now leading a fintech. So that's a big change. And we are working for product development. We are working for the improvement of the industry, and maybe money making is not in the priority list, right? It's not top of a chart. And for banks, since you are custodian of people's money, so you have to make sure that every single project has to give return. So these are the key differences I believe are making, these are the key changes I believe while working in a bank and working in a fintech.
Yeah. Just quickly taking
As
the
we use.
conversation forward, anytime a fintech bank partnership happens and values created, a new set of risks come to the table, right? Now,
Yes,
that is another
yes.
reason why banks worry about partnerships, because if scale, because of partnership, it's inevitable that that scale will bring new risks, right? And because of the nature of the bank, which is so risk averse, it a part of the bank to even if the partnership would mean success and money, because it also would mean therefore risk. So that to our earlier point, that the fintechs that have taken to have licenses now, like the PSOs, PSPs, EMIs, and all of that, they start to appear more attractive and easier for the banks to go out and create deep partnerships, and that's why some of the
Yes.
smarter digital heads and the presidents and players are, because they understand institutions memory. Time they collaborate, it has to be risk averse, it has to sort of work well. And like Amar said earlier in the conversation, then subsequent partnerships will happen faster, and the bank's ability to go down to more riskier or less established startups and fintechs will also come in.
Yes,
uh,
yes,
you
yes.
know
I think, Kasif, we must give credit to State Bank, especially Payment System Department, Suhail Jawad and Shaukat Bizinjo, that they have issued EMI, license regulation, which is, providing platform to the companies, and as well as PSO, PSP, which is providing platform to companies like us to, prove ourselves, prove our worth in front of the industry. And since raising funds, which, minimum we have to raise around $2 million to either establish an EMI or a PSO PSP, तो उससे एक बैंक को भी एक strength मिलती है, एक perception मिलता है कि right, they are working with the right team and with the right sort of people. So
yeah.
I don't know how much time is left.
Okay.
Otherwise, I can continue.
We are, no, we are out of time. A message. So it was a great session, and as usual, I enjoyed speaking to you guys. And I
Thank
think we
you,
log out
Kasif.
now.
Thank you, Amar.
If there are questions, reach out to any one of the three of us, and we'll happy to answer. Bye bye.
Right. Bye bye.
Thank you. Take
Thank
care.
you.
Allah.
Thank you so much, Kasif, Ammar, Adnan. It was really interesting. I know you guys can continue, but we had a time limitation, so we had to cut it off. Well, gentlemen, ladies and gentlemen, you are all been requested that if you have any questions or any suggestions or anything, you can please send it out to us, and we'll forward to the relevant people and get you the answers. Moving forward, I would like to request Mr. Rob Turner. He's a consultant and from Google. So let's see what he has to present to us.
Salam alaikum. Hello, this is Rob Thurner. I'm the Chief Exec of Burn the Sky, and I'm looking forward to sharing this perspective on AI, machine learning, and data science in banking for your event tomorrow. Just a quick introduction before we get going. So I have spent a lot of my time traveling and working in the Middle East, in South Asia, Southeast Asia, including Pakistan. I've been blessed to spend some time with some fantastic clients in your lovely country. In addition to working with banks and telcos, and running Burn the Sky, a digital transformation specialist, I'm the director for an experience management business based in Oman called New Metrics, a director for a digital product design company based in Japan, and a director with the London Institute of Banking and Finance. So a lot of my time is spent helping businesses with their transformation journeys, running executive education programs for partners like Google, the Cambridge Judge Business School, Columbia Business School, INSEAD, MIT, etc., around digital disruption and digital marketing and digital strategy. In addition, I've written 3 books on mobile. I love to connect with the people I meet on these programs, so please feel free to reach out on LinkedIn. We work with over 20 banks across the world, including a large number in your part of the world. I've done a lot of work with UBL, also Faisal Bank, HBL, and you can see some other logos there, both in the Middle East, QNB, Dubai Islamic Bank, and also UOB, Private Bank, a number of other banks in Southeast Asia. So for today, we're going to be looking at 2 main areas. The first is around data, and the second is around automation, machine learning, and AI. So I'm just going to start off now with a perspective on data and some of the big challenges with big data. For most banks, and this data from Forrester calls this out quite clearly, there's a problem with delivering a seamless customer experience. Whether you're in the call center, you're in the branch, you're on the website, or you're using the app, there are often problems providing a smooth customer journey. And that's because for so many organizations, at the back end, their databases and the way that data is transferred from one part of the bank to the other is inconsistent. Now, for the customer, that's really not a good situation. They expect to have a smooth and personalized experience, one they've come to realize and expect is possible by their dealings with the likes of Amazon and Facebook and some of the other digital first organizations. So the first point when we consider data is to realize that this is your most valuable resource today. In so many ways, and this article in The Economist calls this out quite clearly, data has become the new oil. There are some similarities. Indeed, when taken from source, data is rather hard to work with. It requires processing and refinement. But the fundamental difference is this is not a resource that's running out of supply, like oil. Indeed, data is growing in availability, and its availability is expanding exponentially. As ever more data is available, there are indeed oceans of data out there on which businesses can base their decision-making processes. But there are some problems. Just because you can access customer data, does that mean that you should be doing so? Many would argue that without a customer's explicit permission, you should not be simply using their data in hitting them with marketing messages. So we need to be clear we have permission to use data. And in some markets where I live in the UK, GDPR regulations insist that we have to have explicit permission. And I would argue for banks that's so important because you are a business essential to people's lives, but you're not one where you have, you should expect your customers are always willing to be hit with messages from you in the same way that an entertainment brand could expect to be in that position. So the challenge for a lot of business is accessing this data and getting permission to use it, but more fundamentally, understanding what the data really tells them. Often there are divergent versions of real events. You may have differing data points which conflict with one another. There may be a duplication of tracked events. Often if we have people who have set up more than one account with different names, we may think we've got 2 different customers. Actually, we've only got 1 customer. You may be talking to some of your partners and realize actually the volume of interactions and transactions that you're getting, clicks on ads and the like, don't quite add up. And the often situation for a lot of businesses, well, we can't quite figure this out, too much analysis paralysis, and we don't do anything. I would argue that this is not a position we want to be in. More what we want to do is really understand what data we've got and then figure out how we can use it. This research from Cisco shows that a lot of organizations are sitting on a huge amount of data, but they're not doing what they could do with it. In this poll, 95% of businesses agree that they've got huge amounts of data that remains untapped. 39% of marketers feel the data is collected too infrequently or not real time. 39% also believe that they can't turn their data into actionable insights. And then 26% organizations not doing it because the online behavior and personalization opportunities are just not taken advantage of. So data presents a barrier, but also a huge opportunity. And I'm going to quickly now walk through 3 core parts of the data strategy which should be in place for any business, indeed for any banks, because let's face it, you're sitting on a huge amount of really valuable customer data that may well be untapped. So the first stage is collect. We need to bring all this data together: registration data, interaction data, transaction data, campaign-based data, and collect it all into one place. The second part is to consolidate it. Bring together your primary data and third-party data and bring in some real-time updates. Of course, as your customers are out there spending money, as they are using digital channels, whether it's searching, hitting your website, going onto YouTube channels, watching videos, using other forms of social media, they're giving away a real-time set of signals, really valuable signals, which you can use to understand their needs. And this is really important. If we know when they are in the mindset and they need a product, a loan, a credit card, some other financial services product, if we know when they need the product, we can send a highly targeted message at the right time in the right place. And then finally, we need to capture value from all this data. We need to make sure our BIU and our BA teams are working together and being involved in the optimization of the experience for the customer in order to unlock the maximum lifetime value for that customer. And often what we see is businesses are very good at the first bit, collecting all this data, consolidating it, but they're not very good at setting rules and improving that part. Now, we'll come on a little later to talk about AI and machine learning and how they can be using AI and machine learning in order to do that last part, that decision-making part. So let's just look at these in turn. First of all, collect. The key message for you here, and in all the workshops that we run with banks around the world, this is a fundamental start point. We've got to think about our customers in terms of not just who they are, but what they want and what's their behavior. We're doing some work right now for a bank in Saudi Arabia, and we're showing them that you can understand that you may have a female customer living in Riyadh between 20 and 35, but that's only part of the story. What we want is the rich insights around what they really want. Are they searching for business loans? Do we know that they are traveling abroad and spending money abroad? What are they doing on our web pages and app behavior? Which parts of the site or the app are they using, and what are they doing on there? And finally, what expense patterns? What's their expenditure? When we know all this information, we have a much better understanding of our customer. Step 2, consolidating data. Well, you know what? The digital age is fantastic for capturing and using data. We can see everything on the left, what search terms they're using, what emails they're using, what site traffic, what app sessions, what registration data. If we can bring this into a single data warehouse and get a single customer view, we can then extract insights in order to set certain business rules which allow us to present an ever more customized and personalized experience which increases engagement, conversion, and loyalty. And then the third step, capturing value. Well, I won't read every word on this slide. You know, in our workshops, we go into a lot more detail on this. But broadly, we need to analyze all of the data we're capturing. We need to look at the sorts of customers we're engaging with and find lookalike customers. We need to optimize the experience. We shouldn't be presenting all of our customers with the same web experience. We should be customizing. So people with a desire for certain products and services, whether they're retail customers, they are business customers, or they are maybe a combination of both, they get the relevant pages and the relevant content, which helps us drive better engagement, better views, and also be far more efficient with our marketing budgets driving traffic. And then the third part, personalization. We need to be personalizing from a brand point of view on our website. We need to be looking at life cycle communication and life cycle management on our website journeys, and also event-based automated experiences and communication around particular events in their financial journey in order to provide the right information when they are buying their first home, when they are saving for their children's weddings, when they are looking for their retirement and their succession. We need event-based communication as well. So that's the data part. And of course, there's a vast amount every bank can do to improve its data performance. The second part is automation through AI and machine learning. Now, there's an awful lot written about this. I subscribe to The Economist magazine. I have a copy of The Economist right here. And in this article, I can see about AI and machine learning. There are some interesting questions. Is this hype? Is this a fad, a trend, or is it indeed something longer lasting? Now, you don't have to look too far to see that automation is capable of doing a lot of the low skill, highly repetitive tasks, which may at the moment be costing you and your bank a lot of money. Indeed, this article here predicts that 35% of low-skilled jobs may well be taken out by 2022. This article was written in 2017, and we're seeing more and more roles and more jobs being automated, thanks to a chatbot, for example, instead of driving people through to a call center, which can radically reduce your cost base. I do a lot of work with Google, and this is a quote from their chief exec, Sundar Pichai. Machine learning is a core transformative way by which we're rethinking how we're doing everything. If you work at Google and you put a business case for a new product idea, and there are, I think, 30,000 products being put through the Google business at any one time. If your business case does not include a component of AI, it will not be signed off. AI needs to drive in, and within AI, let's be clear that we're talking not just about some version of intelligence that a machine can replicate, but more we're looking at the tool within the AI framework, machine learning, which enables the AI process to take place. So this is machine learning, teaching machines to do stuff, which allows them dynamically to ever get more intelligent and therefore to conduct more and more activities that humans once did but don't need to do. And there was the famous case where DeepMind, the Google division, developed a solution using computers to beat a human being playing the Go game. You may be familiar with this ancient game, Chinese game. So the capabilities of AI are really quite extreme. But let's just remember that we can't bring in any real judgment here, any savoir-faire kind of common sense check. We're simply teaching machines to do stuff which are based on recognition rather than on reasoning. So be clear about where AI and machine learning begin and end. So in terms of recognition and reasoning, there are two different things here. The reasoning bit AI can't do. The recognition and repeat actions based on patterns is where machine learning and therefore AI can be very good. The machine learning revolution is really predicated on three things. First of all, high quality data sets and lots of data. Lots of computing capacity. And of course, thanks to the cloud, we have the ability to process at scale huge amounts of data. And finally, some very powerful tools which allow us to do that processing ourselves. And there are off-the-shelf tools that we can be using. a number of these provided by Google, by Microsoft, by Amazon in their respective cloud-based Azure or AWS operating cloud platforms. What you can do with machine learning is clever. And I talked earlier about some of the patterns and the recognition areas where machine learning has proven to be very effective. We talk about driverless cars. We talk about robotics in the pharmacy and healthcare industry. As it relates to banking, so far, a lot of this has involved understanding how customers are behaving and predicting and then acting on those behaviors. So we know, for example, if we have a customer coming through our website at the awareness, evaluation, purchase, loyalty phases, and they abandon a basket at the do phase, they don't complete a transaction, they may use a calculator, a loan calculator, but not buy the loan, machine learning can flag up immediately who those people are, and then we can retarget them with a message. I do a lot of work in e-commerce. There's clear evidence that if someone abandons a basket and you send them 1, 2, or 3 emails within 24 hours, there is a significant increase in conversion. So if we detect these events, we can then come in with an action in order to get them to complete the task and therefore become more valuable customers. It's very good, and this is an example from IBM, at automating marketing communications, in this case, email. So we can use a product like Silverpop, IBM Silverpop, in order to automate and improve performance of our emails. 70% higher open rate, 152% higher click-through rate, 133% higher message relevancy. Relevance and personalization, very important, and automation allows us to do that. Here's an excellent example. This is a food delivery company. It's been in the news recently, worth, I believe, $1 billion now. They deliver food. Now, they use machine learning very effectively in order to monitor the 500,000 emails they get every week from customers. Most of their emails say things like this: Ocado, I love your website. I've got children, so it's easier for me to do the shopping online. Thanks for saving me time. Using keyword analysis, what Avado can do is see all of the different messages which are positive, and then if some of those messages are negative, the delivery person was late, the food was not fresh, the order was not complete. Those messages, based on the keywords in the email body text, are then prioritized. Those customers get an immediate response within 2 hours. The others can get a response within 24 hours. So using keyword search in order to identify certain patterns allows machine learning to improve the performance of the customer service people and to tackle the most urgent problems first, rather than treat them all the same. So there's a retail example. What about financial services? Well, I'm just going to end with a couple of examples and take those from this list. So this is a list of use cases that we like to share with clients around what is an effective use of machine learning, AI, across the different sectors in which we work. And you can see for yourself: risk analysis and regulation, customer segmentation, cross-selling and upselling, sales and marketing campaign management, credit worthiness evaluation. Let's look at a couple of examples. This one is from OCBC in Singapore. They're using Know Your Customer process in order to identify and verify a client's credentials, and then to assess whether they are, what their credit worthiness is, to access and then share this information across their existing network and share this information with other banks using cryptography, developing efficiency and security when collecting, validating, and sharing this data, and streamlining their auditing and regulatory reporting process. So at the beginning of the journey KYC, they are very powerful there, using blockchain and using machine learning in order to capture and verify data. We now have existing customers on board. What services do we offer them? How do we upsell and cross-sell? Here's an example from Barclays. Understanding the customer allows Barclays to select which of the products in their set they're going to offer their customer, and then to offer them the relevant service, product or service. And as you can see on the right-hand side, having moved to loan, we then come down here, and the offer is provided only to the customers with the right credit profile. Not everyone can apply for a Barclays loan, see their personalized loan rate or provisional loan limit online within the app. This is because certain restrictions apply. So Barclays, once they've acquired a customer, upselling, cross-selling based on the profile of that customer. So this is very positive. And then reducing the cost of churn. This is a really important area. We need to make sure we're maximizing the value of our user base and not losing any customers. In this case, we can use AI and machine learning to retrospectively analyze what engagements we've had with our customers, and then set rules for the sorts of marketing we're sending, and then assess the optimum number of engagements, of interactions, the channels which are most valuable, and then to look at some differences between different actions and build a hypothesis around the combinations of interactions which lead to a positive or a less positive outcome in terms of product and service usage. Could be around the balance, could be around applying for different products. So at the end of it, I would urge you to think that the technology is out there. You can do a lot of very smart things here, but just be clear that a lot of the investment in AI and machine learning has been based purely on the pattern and recognition information from which stem insights that you can then make some clever decisions. AI, machine learning are not the answer to every problem. We urge you to focus very clearly on your people, your most valuable asset. Make sure you're expanding their knowledge and capabilities, building new product and service innovation around insights from your customers, and finally, expand your analysis, be tracking huge amounts of data, build your hypothesis around what's the optimum product mix for each individual customer, and develop an experimental mindset. We offer a large number of online and face-to-face workshops around digital banking, around data-driven marketing, around AI, machine learning, and a whole load of other programs. We'd love to reconnect with our friends in Pakistan. Please feel free to make contact when you can. I'll leave that up on the screen. I wish you all the best with the day tomorrow for the organizers of this event, and look forward to connecting with you in due course. In the meantime, please keep safe, and I wish you an enjoyable digital banking future. Please get in contact if there's anything we can do to help. And with that, salam alaikum, thank you, and goodbye for now.
Thank you, Mr. Dobbs. So moving out to our next, I would like to invite Mr. Scott Bales, Strategic Advisor of Garrison Lambert, Singapore. Please welcome Mr. Scott Bales.
Hey everyone, Scott Bales here, author and technology advisor. But more importantly, I'm really delighted to be able to share with you all today some of the key lessons that I've learned in my amazing career over the last 10 years. And I say amazing not because I don't think I've performed any miracles. It's just I've had a very unique career, a chance to do things in some amazing countries such as Pakistan. So some of you may remember, I was there over a decade ago when MCB had both their projects in mobile and in light, when Easy Pacer was launched in the country, and most recently actually helped the High Commission actually bring the first Pakistani fintech delegation to the Singapore Fintech Festival here in 2019 in Singapore. So really excited to share with you guys today some key insights into terms of where I'm seeing the industry going, where I'm seeing the key trends that are shaping the industry. And while we may have some amazing thoughts around AI and cloud and all these amazing technologies, but actually what I've learned is there's a key ingredient within the success of any industry, and that's, do you actually understand your customer? And so to tell that story, I've introduced you to a character called Isaac. To take you right back to sort of where my career sort of really got its foundations is in 2008, I had the amazing privilege of working in Cambodia to build a business called Wing Money. It was, it wasn't the first of its kind, but I feel it was executed in a very different way. It was a bank that invested in building mobile money for an emerging or frontier market. And today, Wing is so successful that it processes, well over half the country's GDP. Its founding CEO, Brad Jones, moved on to Myanmar to then also found Wave Money, and both models have been hugely successful in both countries. The success I took there actually, which brought me closer to Pakistan, was actually first executed in Bangladesh. So we working with some of the banks there and some ex-Telenor people, we actually helped build a business called Bcash. Bcash today is a deeply important part of the Bangladeshi community and a growing part of how people transfer money and do trade every day. What really came out of it though was the world around us is getting more and more complex. And so in a survey I did with a law firm recently, we recognized that 66% of leaders realize that the world is becoming increasingly more complex, whether it's technology, compliance, demands of customers, new technologies, but only 5% of businesses are actually benefiting from that. What really came was that 2/3 of senior executives realized that the adoption of new technologies was a primary concern for their business. More importantly, just behind that at 62%, was technologies that would completely change the way they do business. So talking about cloud, big data, AI, blockchain, things that really have shaped industries at a structural level, which really gave birth to fintech only in about 2014. What we're seeing though is it's created a whole new type of companies that compete on different means, different measures, different technologies, different cultures. And as a result, the key concern for most businesses today is actually not so much the technology itself, but is that somebody else will apply that technology in a way better than they can, or the way they think they can. And so you see here some amazing names. Grab has been very transformative in Asia, SpaceX in space travel, Tesla in the automotive and electronic space, Airbnb in travel. Now, I know a number of these businesses have struggled through COVID, but I have no doubt every single one of them will bounce back because their core culture and DNA is that of to thrive in the modern economy. The reality we face is that if you look at the top, Fortune 500 companies today, only 30 are expected to survive what we call the digital transformation. And that is essentially the digital transformation started in around 2010 and will end in 2030. So by the end of this decade, we expect that only 30% of the Fortune 500 companies that started in this decade will still be around. We have individuals that are typically shaping industries, whether it's Elon Musk and his space travels and antics with these electric cars, Jeff Bezos now, thoroughly growing in terms of Amazon's growth, both as a retailer and as a cloud infrastructure provider. And Jack Ma, who has probably one of the wackiest personalities, and his ecosystem of companies is growing, globally. One of the things that we took back in terms of how do we aspire to learn from those individuals, those cultures, those applications of technologies. I was given a chance to actually do this. I helped co-found a digital bank in North America. Some of you may have heard it, called Movin. And Movin was based on a tenet, not so much about fintech or AI, but actually how do we empower individuals to have a smarter relationship with their money? What it boiled down to was a cultural DNA of how do we help people spend, save, and live smarter. And it really came down to some really simple facts, and that's around the vast majority of us almost waste 10% of our disposable income through what we call habitual spend. Spending that you do without even thinking. You either rationally or emotionally justify for it. And if we could help people reconnect objectively with that spend, we have a greater chance of actually putting them on a positive path towards your own financial health. What that really required was a skill that is not technology, it's not AI, it's not even some of these amazing buzzwords we see in press releases. It's not even an innovation team. It was simply, how do you empathize for your customer and convert that into an opportunity? The best companies in the world, they don't have better technology. What they just seek to do is they seek to understand their customer at a deep, objective level first, before they transfer that into any opportunity within their industry. So when we talk about Isaac, I use Isaac as, it's using a model called persona modeling. And so for companies that do persona modeling best, they tend to deeper understand their customers' needs, their pain points, their goals, but more importantly, are better at converting an opportunity within a market. So Isaac Lim was born in 2007, the same day as the iPhone. So he grows up in a world where what we call, what is now ubiquitous in terms of smartphones has always been there. It's not new for him, it's always been there. And this deeply changes his psychology. Essentially what it's created in our society is 3 different generations. We have digital natives, people that are born into the world that have always see technology as the native way. But at the other end, most of our companies are actually, their decision-making is done what we call digital laggards, people that are the last to adopt technology. The vast majority of us are what we call digital immigrants, in that we've mastered technology, but our ability to really execute on it is limited by the fact that we grew up in a pre-digital era. To give you an idea of what that looks like is, some of you have your education was based on books. Now, if you go to any student today and ask them how many times they use a book for their education, it's alarmingly a lower amount. In fact, Encyclopedia Britannica, after 250 years in print, is no longer printed. Junk mail is a complete waste, so actually even going to your mailbox is not a behavior of this next generation. Classifieds, which typically would have been things like births, deaths, first job, first car, this kind has been replaced by some different form. Landline telephones in the yellow pages, so it's actual physical telephone directories, no longer the default norm. In fact, very few millennials could even tell you their landline telephone number, their own landline telephone number. Yet when I grew up, you knew the landline telephone number of your friend, your girlfriend, your mum, your cousin, you knew all those numbers. The fax machine now is the single largest path to frustrating customers. So if any of your businesses are out there today are still using a fax as a means of serving your customer, it actually has shown that it has a negative impact on NPS, or Net Promoter Score, which is essentially how you measure your customer's opinion of your brand. Optical discs are now obsolete, and they basically dominate software, music, movies, are gone. But what really showed is that shift in the industry here with technology meant that large global number ones quickly went under. Borders and Blockbuster, Universal Case Studies, Kodak, the list goes on in terms of people that basically died because they refused to adjust to the new needs of the customer. This is not about adjusting to new technology. This is about realizing that the customer has new needs. So we look at Isaac Lim, and particularly an important date. Most people don't realize this, but a generation really embeds its first impressions of the world at the age of 17. So in 3 years' time, what we call, someone who's been around as long as the iPhone will set their first impressions for life in 3 years' time. And what I mean is this, is that the brands that you like and dislike at the age of 17 will likely be the brands you like and dislike for life. Think about Coke versus Pepsi, Sony versus LG, Apple versus Samsung. The brands that you liked at that age were the ones you like for life. Banks know this very well, because once you establish your first banking relationship at the age of 17 or 18, it's very hard to get you to change that primary relationship until your next major life milestone, like buying a home or something. But Isaac isn't the first digital native, so we go back even a step further. Timmy was born in 2000. He's around as long as a smartphone. If any of you remember a Nokia communicator. but he's also been around along with PayPal. So sending money, as simple as sending an email, has now been around for 20 years. It's been an innate part of society for 20 years. And Timmy's generation, so people that could send money via email addresses, they made their decisions 4 years ago. It's too late for that generation now. But let's look at the two most compelling in terms of setting the expectations. And these are vitally important in no matter what industry, whether it's financial services, whether it's retail, logistics, tourism, whatever industry. These two individuals essentially determine a huge part of consumer choice. We have Ethan, born in 2001, Isabel, born in 1998. These two parts basically touch every single human being in life. The first one is Ethan is born the same day as the iPod. Now, again, if you look at the iPod as a technology, you miss the point. Everybody loves music, no matter what the genre, culturally, whether it's, drum and bass or jazz. We all have our preferences for music. And so by shifting from the form factor, this actually touches every single consumer in terms of its impact around how a consumer expects other brands to operate. Believe it or not, so the likes of Spotify today and Apple Music have a large impact on customer expectations than most big banks. But the more important one is Isabel. Isabel is as old as Google. Google is now 22 years old. In fact, just in the last couple of days. The important part of this is that for Isabel's generation, the answer to any question is 2 clicks away. And nothing highlights this more than this very simple fact. For the last 50 years, the most revered person in your life has been a doctor. Yet, usually in a physical audience, I ask you to raise your hand. Raise your hand if you would admit to Googling or WebMDing a symptom before you go and meet the most revered professional in your life, your doctor. Statistics show that 77% of people second guess the most revered professional in their life, their doctor, because of Google. Basically, we can now validate, research any single piece of information. It completely changes the power from us, the message, a brand, putting out a PR message to the consumer. They must believe it because they can verify it. Isabel made her first consumer choices 6 years ago. So you've got to think about most brands now have been subjected to the consumer's expectation of their brand, not your choice of brand, the consumer's expectation of brand for 6 years. And Ethan's for 3 years. So that means that essentially the impact of music has been shaping people's choice for 3 years. What comes out of this is 3 different roles we each play in society. Independent of independent of everything else, we are a citizen of our country. So in the case of Pakistan, you may be a mother, a father, a son, a student, but that role really is you're a citizen within your broader community. This includes cultural norms, societal norms, sporting preferences, for those that love cricket out there. These are generalistic roles and responsibilities we take on within a country. Then within that, when we earn $1, we decide to actually become a customer of businesses. We determine the success and failure of different businesses around the world. And lastly, based on the career choices we make, we choose where we go into the workforce. Whether we want to start our own business, whether we want to be an employee, whether we want to go to public service, the choice is essentially ours. But those roles are shaped by everything that I've just spoken to you about, how our upbringing and shaping of norms. So we'll give you a perfect example. This is what we call Singapore food bingo. I live in Singapore, by the way. And essentially eating, which is a daily habit for most people, has completely changed in a way that most people would laugh, actually. 5 years ago, the obsession with taking photos of our food before we eat it would be laughed at. Today, almost 80% of Singaporean residents take a photo of food at least twice a week. Twice a week for nearly 80% of the population. Basically, unfortunately, my most quotable quote is that if Instagram were ever to crash, Singapore would starve. So what does this actually mean in a way resulting to technologies? It means you have to think about what is the impact of this on customer expectation, customer behavior. Because it can't just be about the technology. You can't just impose a technology on people without knowing its impact. So mobile, for instance, has meant that our behavioral association with anything happening at a physical place, a bank branch, or going to a physical shop, no longer has to be at those physical locations. We've been physically separated for a long time. 5G means that becomes more powerful. We're going to have smarter AI assistants, whether it's Siri, whether it's Google. This will make IoT and those assistants significantly more powerful. So it means, for instance, in any context, we can ask deeper, more meaningful questions. Cloud computing means that the previous limitations imposed on infrastructure, we can ask bigger, more complex questions at a faster pace. Now, I was very lucky to work on the first Monte Carlo risk models 15 years ago, where doing 10 Monte Carlo simulations before doing a transaction was considered groundbreaking. Today, JP Morgan Chase, they do 100 million scenarios prior to actually confirming a transaction. APIs mean that more and more businesses are connected in ecosystems. Distributed ecosystems such as blockchain means that traceability in a supply chain, whether it be for contracts, for deeds or trade, are completely transparent and almost autonomous. We have to think about the application of it, not just the technology. On top of that comes smart machines and artificial intelligence. It means we can actually address one of our biggest weaknesses as a species. We remain an irrational, emotional species. AI has the potential to bring not only objective meaning to our decisions, but also meaning we can make more decisions in a shorter period of time. So how do we approach technology? The first thing here is I want you to consider, starting with why. Why does the technology even exist? Understand if it's something that's like a new normal. For instance, I encourage you all, public cloud is now a norm in financial services. It's no longer an exception. It's no longer the thing on the side. Public cloud as a means for running your infrastructure is a norm today. Security is a day zero activity, meaning that we have to put security as a first concern, not a last concern. We also need to reconsider the risks, because actually a lot of the ways we manage risks in the 1980s or the 1990s are very different today with technologies. We need to learn technologies first before we try and govern them. The unfortunate mistake that most people make is we impose rules on technologies that we don't yet understand. Whether it's cloud, whether it's AI, make sure you've invested the time to understand it before you actually try to set rules. And the last thing is what we call loose coupling or microservices, is moving away from huge systems into lots of little integrated systems. For the consumer side, it really is realizing that technology is now a part of everybody's business. We're building what's called mobile utilities, and a utility is integrated into somebody's life. So whether it be where they are, what they are doing, what they might be intending to do, what the goal in that very moment might be, is understanding how do you integrate with their life. The last thing is being contextually aware. So what does being in that environment mean? Are they in a retail store? Are they on the street? And off the street, they might be looking to hail a ride. If they're in a retail mall, clearly then a retail experience is more applicable. And bringing those things back to the front of mind in the design of our technologies. But the next part really is realizing that we no longer sell products. And this is my single biggest point to the financial services sector. You're an industry trying to sell products when your customer expects an experience. Realize that you are in the experience business, or service, better off, you're in the services business, not selling products. A mortgage is a product, but what the experience is someone buying a home. For instance, a bank account is a product to you, but actually it's a means to buy things in a customer's mind. We are really there looking to empower lifestyle. It's playing in any scenario within somebody's life. What's the positive role that you play as a service provider? So a quick summation of how to actually make this happen. First, get out of your office. You cannot understand your customer sitting inside your office. Find a customer problem that you are passionate about solving, because this means you'll be more passionate, you'll be more persistent to actually solve for that customer's need. Understand what experience it would take to solve that customer problem, and build small experiments to figure out how to do that effectively. Whether it's a minimum viable product, whether it's doing customer interviews, a small way to measure how is the best way to solve that customer problem. There really is three key things. First, customer-centric ideation, finding product market fit, and building and creating superfans. Superfans really are the new form of marketing, in that you know your business is a success when your customers are your best source of marketing. This is a really simple template that I've used over the years. It's 4-quadrant model. Anyone can do this. Go and ask those simple questions. What facts do you know about your customer? What goals are they trying to achieve? But in trying to achieve that goal, what pains do they still experience? And then what behaviors are they exhibiting in the attempt to achieve that goal? I'm going to finish there because I'm just out of time. But quick reminder, a couple of books if you want to grab your hands on. I was a contributing writer to Next Gen Finance and Bank 3.0, but I have 2 books of myself, Mobile Ready, which is really about the mobile-centric consumer, and most recently, Innovation Wars. But if you still have questions, reach out to me on LinkedIn or my email. Thanks everyone for paying attention today. I look forward to my next chance to getting to Pakistan. I know my time, particularly down in Karachi with the food there. Like I'm a big fan of Pakistani food. I hope to get back there very, very soon. Thanks everyone.
Welcome back. Thank you, Scott Bales, for sharing the notes and details. Next is Emily from Thales. She's going to talk about digital commerce and network tokenization. So please welcome Emily.
Hi, my name is Emily Casseron. I'm leading the digital commerce product line at Thales. We serve e-merchant, digital wallets, and payment service providers and help them enhance and secure digital transactions. Today, we're going to talk about network tokenization, how it works, why it is a game changer for digital payments, and how it is expected to scale. But before digging into the technology, I would like to talk about some of the use cases we have seen on the field over the last years. And most of them are powered by what we call card-on-file payments. A card-on-file is when the end user agrees for a mobile application, a merchant, or a service provider to save his card payment details in his records for future use. So a good example of a card-on-file payment is one-click shopping, and it has become very popular and well-known with Amazon, being a big part of their success. The idea is that during checkout, your card credentials are already registered, making the payment overall expeditive and very easy. It works as well for travel booking and many other services and goods that you can buy online. The second example is subscriptions. Most of us subscribe to many services like a mobile line, utilities, video or music streaming, or food boxes that we receive on a regular basis. All of these payments are automated thanks to card-on-file. Another interesting and innovative example is the IoT. You may have heard about smart fridges that are going to order all the ingredients that you need for a recipe automatically, or smart cars able to pay for gas or tolls, or even home assistants, that you could use, in fact, to shop anything online. As you may have noticed, most of these devices have no screen nor keyboard that you can use to enter your card details. They need to be pre-registered on file. Last, I would like to talk about some digital experiences that happen in the physical space. For example, scan and go applications are becoming more and more used in store to scan articles, then process the payment online without having to stop at the cashier. Another example is ride sharing. Physically, the customer is in the car, but the payment happens online and is very easy. So all of these examples are just an illustration of how present card-on-file payments are today in our daily lives. However, while consumers really appreciate all these innovations and the convenience it brings, there are a lot of security concerns that remain. So here are just some numbers that are valid at a global scale. Fraud is typically 6 times higher in card-not-present payments than in card-present transactions. So you may think about some examples of fraud when your physical card is stolen, but actually the main source of fraud happens online, when hackers access a database of card credentials. This is what we call a data breach, and you may have seen in the headlines many examples of airlines, merchants, or even insurance companies that have been hacked. And this is a major cause of online fraud today. In addition, sometimes the fraudsters do not even need to access your payment credentials. They are just going to take control of the full end-user account. This is what we call account takeover, and despite all the security measures that are being put in place, it keeps increasing. So the problem with fraud is that it can lead some players in the digital space to overreact. And we see actually a lot of genuine cardholders seeing their transaction being rejected, mostly by the issuing bank for a wrong reason, leading to high authorization declines. So this is very frustrating for customers, and we will see that for merchants, it can lead to a big loss of business. So again, if we compare card-not-present and card-present transactions, we see that false decline are 4 times higher in remote transactions. Also, 1 in 6 shopper, cardholder, have experienced at least 1 decline over the last year because of a suspected fraud, what we call a false positive. And just to measure the impact for merchants, it is actually much higher than the cost of fraud itself. The estimation says that $1 in $10 are lost due to false decline. And this is a big impact for the merchant's top line. So now we will see how network tokenization can help solve these issues. First, I'm going to explain you how it works in a few words. You may already be familiar with tokenization, which consists in replacing sensitive data by an alias to limit the data exposure. It has been used already for years, even for card credentials. What is specific with network tokenization is that the physical card PAN is actually replaced by a surrogate that we call a token. And this token has a PAN format. It is generated by the payment networks and mapped to the original PAN of the physical card. And it can be used across the network just like a regular PAN, making it really fully interoperable. It all started with the first proximity NFC wallet deployment and Apple Pay. Then the use of network tokenization was extended to other wallets like Samsung Pay or Google Pay, and other proprietary mobile wallets like the one enabled by banks or retailers, and also some wearables manufacturers. And today it is being extended to digital commerce as a whole. So something very important with EMV or network tokens is that they are device bound or merchant bound, meaning if a merchant is hacked, for example, the tokens will not be usable anywhere else. This is the first key security feature of network tokenization. The second one is that each transaction is cryptographically secure by having a dynamic cryptogram used during the authorization. Finally, network tokenization enables the lifecycle management of the card. The payment networks store the original card data in what we call their TSPs and keep the information up to date, as well as the mapping with all the tokens corresponding to this physical card. Meaning, if you have registered your card to subscribe to a service, You will never have to update it again. It will be done automatically, which is already a great benefit. So now talking about numbers and scale. So today it is estimated that there are more or less 3 billion cards, physical cards on the field, and also 44 million of merchants where you can use a payment card. Over the next 3 years, things are expected to change dramatically. There should be 30 billion ways to pay, if we include physical cards, of course, but also mobile wallets and all the card-on-file use cases that we discussed before. Entry barriers are also much lower now to set up an online business. So there should be 10 times more places where consumers can buy. So overall, by 2023, it is expected that there should be 5 billion tokens that are used to pay by consumers. And as you can see, it should exceed the actual number of physical cards. So we have talked about the technology and some of the benefits from a security standpoint and also lifecycle management. Now I would like to focus on how network tokenization can help also increase the transaction approval rate and tackle the issue of false decline. So we talked about domain control and dynamic cryptograms that are a first level of security for card-on-file with EMB tokenization. Merchants have also the possibility to share additional information with the issuing bank of the cards. Mostly, they can share some risk assessment parameters, like, for example, an account score from 1 to 5 to give the issuer more information about the risk relating to a specific user and his card. Another way to add more security is device binding. It consists into binding a token to a specific device or browser to make sure that there is an additional authentication factor being the device of the end user. During the device binding operation, the issuer has the possibility to perform a cardholder verification to check that the end user in the possession of the card is really the rightful owner. So it can be done using different methodologies like a one-time password or through a call or a 3D secure. And last, the merchants has also the possibility to implement a strong customer authentication under its full control and to share the result and the details of the authentication with the issuer. For example, the merchant can share with the issuer which authentication methods he used, like device binding or biometric, for example. All of this, supported by network tokenization, contributes to increasing the cooperation between merchants and issuers in risk management relating to online transactions. So, as a conclusion, I would like to give you some numbers in terms of approval increase. So today, Thales focuses on enabling these cooperations between e-merchants and issuers from a technology standpoint, but also by sharing some market knowledge about the local ecosystems and some best practices. Over our first project with our customers, we have seen great results from an approval perspective. So, of course, numbers can depend from one market and one business to another, but what we have seen so far is an increase in the approval rate from 3% up to 10%, depending on the transaction amount, depending on the players involved in these projects and on the market, which is already very promising results for network tokenization and confirming the potential of this new framework and how it can help develop digital payments. So thank you for your attention. If you have any question, as this is a pre-recorded presentation, feel free to reach out. As you can see, my email address and contact on this slide. And also, I invite you to visit Thales Digital Commerce website, where you can find additional materials about network tokenization and more details. Thank you. Have a good day.
Thank you so much, Emily. Interestingly, we are getting a lot of questions. Thank you, Mr. Ahmed Larek, EVP Summit Bank, Mr. Arup Kumar from Bangladesh, Mr. Kaisar Shahzad from Dubai, Ms. Mavish. We have been noting down and forwarding your queries to the relevant to the panelists and all the concerned people, and they will be responding back to you shortly. Moving to the last and most interesting part of our event is the fire chat for artificial intelligence, data sciencing, and machine learning. For that, from Microfinance Bank, I would like to welcome Mr. Sohail Malik, Chief Digital and Financial Inclusion Officer, and Mr. Humayun Sajjad, Executive Vice President, Head of Digital Transformation and Payments from UBL. Please welcome them. Thank you.
Hi, Humayun. How are you?
Bilkul theek thaak, Sohail. How are you?
I'm fine as well. Hopefully, Karachi is now stable, along with the whole country, और सब कुछ बेहतरी की तरफ वापस आ गया है.
Yeah, I'm hoping there was a lot of I would say disaster across Karachi, but now hopefully back to normal.
True that. So, क्या चल रहा है बैंकिंग में, क्या चल रहा है, especially UBL की तरफ क्या चल रहा है in terms of digital, in terms of innovation और सब कुछ, तो क्या, what do you think about that in Pakistan?
I think across the industry एक focus है thanks to COVID वो थोड़ा catalyze भी हो गया, which is about the transformation to digital, trying to move traffic away from branch and facilitate customers as much as possible on the self-service channels. So within UBL भी यही focus है, किस तरह से हम customers को और उनकी demands को digital channels पे service कर सकते हैं. We as a bank are sort of no different than any other bank in the industry, maybe a little ahead. We took a start earlier, but generally speaking, that's where almost everybody is.
True that, really true. Pakistan में I think बहुत बड़ी opportunity available भी है और बहुत तेजी से काम भी हो रहा है in terms of digital channels, adding the innovation to the basic banking. तो अगर हम एक scenario देखें तो कोई भी digital channel है, कोई भी platform है, कोई भी digital product है, बहुत change आया है over the last 4-5 years especially, कि जो customer की interaction है on the branch counters वो कम होती जा रही है. self service channels जो हैं वो on the boost side हैं, चाहे वो कोई भी channel है, digital app है, आपकी मोबाइल बैंकिंग है, इंटरनेट बैंकिंग है, मोबाइल वॉलेट्स हैं, डेबिट कार्ड्स हैं, हर चीज ऑन द रेज मोड जा रही है और जो कस्टमर इंटरेक्शन ऑन द ब्रांच लेवल है वो आहिस्ता आहिस्ता हर जगह पे रिड्यूस हो रही है. दैट्स गुड थिंग आई बिलीव. मतलब मुझे तो इवन याद भी नहीं है कि लास्ट टाइम मैंने अपना चेक कब लिखा था, बिकॉज ऑफ द रीजन के जो भी आपने फंड ट्रांसफर करना है, कुछ भी करना है, वो यू कैन डू ऑन द ऐप. So that's good thing, really.
Yeah, I would slightly disagree, Sohail. I think in terms of percentage, yes, we see the uptake of mobile or digital channels in the excess of 50-70% as compared to past. but in absolute numbers, banking industry में close to 50 million plus accounts हैं, or 30 million plus customers हैं, but we still see mobile app को या mobile banking को 6-7 million से ज़्यादा use नहीं कर रहे हैं. So void काफी बड़ा है. The other thing that we've experienced in our transformation journey, it's customers are still, barring a few specific segments, largely customers are not willing to move to digital channels from a banking perspective. वो YouTube और Facebook तो use करना चाहेंगे smartphone पे, but not necessarily the banking applications. And that is an uphill task. How do we help customers? So I still believe there is a long way for this transformation from the customer perspective to actually happen. दूसरा चैलेंज ये है कि इवन कम कस्टमर्स हैं जो भी मोबाइल बैंकिंग या डिजिटल बैंकिंग को यूज कर रहे हैं, लेकिन सोशल मीडिया इतना स्ट्रांग है, जो वॉइस है इवन एक कस्टमर की भी, वो ऐसे लगता है कि वो सब कस्टमर्स को रिप्रेजेंट कर रहे हैं. दैट्स व्हाई at least our impression is that people are hungry and they're really looking forward to become to adopt digital banking. Reality में ऐसा है नहीं.
अच्छा, मेरा ख्याल ये है कि इसकी शायद बहुत बड़ी रीज़न है लोगों का एक फियर कि यार अगर मैं अपना डिजिटल चैनल को एक्टिवेट कर लूँगा, मोबाइल एक्टिव कर लूँगा, तो शायद मेरा पैसा एट स्टेक आ जाए, मेरा शायद जो अकाउंट है वो कंप्रोमाइज़ हो जाए. मेरी पर्सनल ओपिनियन ये है कि दैट्स द बिगेस्ट रीज़न, दैट्स द बिगेस्ट हर्डल जो कस्टमर फेस कर रहा है. और ये आई बिलीव बैंकों का काम है इस कंफर्ट को बिल्ड करना अमंग कस्टमर्स थ्रू वेरियस स्टेप्स, और आप समझ लें अवेयरनेस. यार आप डिजिटल चैनल यूज करते हैं तो वो उतना ही सिक्योर है जितना आपका एक कन्वेंशनल बैंकिंग है. तो उसकी एग्जांपल देता हूं कि क्या आज किसी कस्टमर का चेकबुक जो है वो कंप्रोमाइज नहीं हो सकता? हो सकता है. उसका चेक मिसयूज हो सकता है. सेम इज द केस विद मोबाइल ऐप, जब वो अपनी कोई चीजें कंप्रोमाइज करते हैं तो वहां भी एक तरह का उस पर मनी स्टेक पे आ सकती है. और सेम इज द केस विद बैंक्स के बैंक्स जो हैं वो बहुत से मेजर्स ऐसे ले सकते हैं जिससे लोगों का कंफर्ट बिल्ड हो. फॉर एग्जांपल अगर हम बात करें ऑटोमेशन की, इनोवेशन की, एआई रिलेटेड फंक्शनलिटीज, तो एक बहुत बड़ी अपॉर्चुनिटी अवेलेबल है पाकिस्तान में कि एआई को यूज करते हुए ये जो आपके कंट्रोल्स हैं उनको बेहतर किया जा सकता है. मैं उसकी एक छोटी सी एग्जांपल देता हूँ. आपकी मोबाइल ऐप है, मोबाइल ऐप के अंदर आपका सबसे बड़ा जो हर्डल है या प्रॉब्लम है या लोगों के माइंड में फियर है, यार मेरी ये मोबाइल ऐप को यूज कर लेगा. अब एआई के इतने बेस्ट यूज केस हो सकते हैं जो कि डिफरेंट बैंक्स यूज करके उस मोबाइल ऐप को सिक्योर कर सकते हैं. वो है आपकी प्री ऑथराइजेशन ऑथेंटिकेशन. आज के दिन में आप देखें कि फ्रॉड किसी बैंक को तब पता चलता है जब आपकी ऑथेंटिकेशन हो गई, पैसा चला गया. अगर आप इफेक्टिवली यूज करें एआई बेस्ड सिनेरियोज को और ऐसे यूज केसेस बिल्ड करें जो आप समझते हैं कि यार रियल ग्राउंड में ये होता है, तो आप अपनी ऑथेंटिकेशन से पहले ही फ्रॉड को प्रिवेंट कर सकते हैं. मैं एग्जांपल देता हूं कि मेरा एक कस्टमर है जो इस्लामाबाद में रहता है, वो नॉर्मली फंड ट्रांसफर की एक्टिविटीज करता है. ऑल ऑफ अ सडन मेरा सिस्टम डिटेक्ट करता है कि यार मोबाइल ऐप की एक रिक्वेस्ट आ रही है बेस्ड ऑन दी किसी अफ्रीकन कंट्री से, इंडिया से, या इवन मैं अगर पाकिस्तान की बात करूं तो कराची से एक रिक्वेस्ट आ रही है मोबाइल ऐप की, वो फंड ट्रांसफर करना चाह रहा है. और फंड ट्रांसफर के अंदर भी मेरा एआई बेस्ड सिस्टम देख रहा है कि यार ये एक अनयूजुअल ट्रांजैक्शन है. वो जो कस्टमर का पिछला 1 साल का, 6 महीने का, 4 महीने का, 3 महीने का बिहेवियर है, उससे बिल्कुल फर्क है. तो वो प्री ऑथराइजेशन जो ऑथेंटिकेशन है वो वहां पे किक इन कर सकती है. वो उसको या तो स्टॉप कर सकता है, उसमें डिले ऐड कर सकता है, कोई कॉल बैक का ऑप्शन ले सकता है, कोई एसएमएस सेंडिंग का ऑप्शन ले सकता है, कोई पुश नोटिफिकेशन का ऑप्शन ले सकता है, उसका आईएमआई चेक करके उसकी बेस पे ऑथेंटिकेशन रोक सकता है. इस तरह के सिनेरियोज और बहुत से बैंक बिल्ड कर सकता है टू स्टॉप दीज काइंड ऑफ एक्टिविटीज. इससे कस्टमर का ट्रस्ट बिल्ड होगा, कॉन्फिडेंस बिल्ड होगा. यार अगर कहीं मिसयूज होने की कोशिश करता है तो मेरा बैंक इज देयर टू सपोर्ट मी, मेरा बैंक इज देयर टू टेक केयर ऑफ दिस. इस तरह की चीजें मेरा ख्याल है कि बहुत हो सकती हैं. व्हाट डू यू थिंक अबाउट दैट?
I fully agree. Artificial intelligence, if I take a step back, थोड़ा सा फैंसी वर्ड है, तो इससे लगता है कि पता नहीं क्या करना पड़ेगा for this to be implemented. So simple pattern recognition, I remember past में भी और अभी भी हम emails पे जो rules लगाते हैं, वो भी एक basic example है. या मोबाइल में हम मैसेज लिख रहे होते हैं तो एक प्रिडिक्टिव टेक्स्ट आता है, वो भी एक एआई की एग्जांपल है. सो जो आप बात कर रहे हो कस्टमर्स की सिक्योरिटी और अवेयरनेस के लिए, आर्टिफिशियल इंटेलिजेंस या मशीन लर्निंग एब्सोल्युटली हमें ये अपॉर्चुनिटी ऑफर करती है कि हम पैटर्न रिकग्निशन, बिहेवियरल पैटर्न्स जो उनसे हैं वो कैप्चर करें. और इवन आई रिमेंबर मास्टरकार्ड से किसी एक टाइम पे ये डिस्कशन हो रही थी कि ये जो पैटर्न रिकग्निशन है यूजर बिहेवियर की, उस पे हम लॉगिन पे ऑथेंटिकेशन लगा सकते हैं, जो कि प्रोबेबिलिटी दे सकता है कि द कस्टमर हु जनरली लॉग्स इन, उसका ये बिहेवियरल पैटर्न है फ्रॉम अ स्क्रीन इंटरेक्शन एंड टच टैप पर्सपेक्टिव, वर्सेस इवन अगर किसी के पास यूजर नेम पासवर्ड है भी और वो बिहेवियर टाइपिंग में और वो रिफ्लेक्ट नहीं कर रहा, सो वी कैन give us lower probability score to put that in a different monitoring window. So artificial intelligence opportunity तो बहुत ज़्यादा ऑफर करती है, लेकिन चूंकि ये like I was saying, ये थोड़ा fancy word है और overhyped word है, so people think that they really need some sophisticated infrastructure to operate. While yes, there is absolutely very complex setup depending on what kind of machine learning and artificial intelligence capability that you want to build in the customer experience. There are simpler examples as well which banks can definitely use.
I agree. और इसी तरह से ये तो हमने एक एस्पेक्ट इसका यूज किया, बैंकों की सेलिंग वर्ल्ड में उनकी क्रॉस सेल अपॉर्चुनिटीज के अंदर बहुत बड़ा वाइटल रोल प्ले कर सकता है. फॉर एग्जांपल, मेरा एक कस्टमर है जो पिछले 5 साल से मेरे साथ बैंकिंग कर रहा है. मुझे पता है वो मे बी एक सैलरीड क्लास पर्सन है, उसकी हर महीने की एक स्पेसिफिक डेट को सैलरी आती है. मेरे सिस्टम को पता है कि कितने दिनों में वो कितने % फंड यूज कर लेते हैं, और उसकी जो कैटेगराइजेशन है वो भी मैं आराम से कर सकता हूँ कि वो कितना पैसा कहाँ पे लगाता है. और मेरे पास ये पैटर्न अवेलेबल है पिछले 5 साल का. तो मेरा एआई बेस्ड सिस्टम नैनो सेकंड्स के अंदर उसके लिए प्रोडक्ट सजेस्ट करके, उसको ऑफर करके, अगर वो इंटरेस्ट शो करता है थ्रू दी मोबाइल ऐप, तो इंस्टेंटली उसको अप्रूव करके इवन डिस्पर्स तक कर सकता है. हम अगर बात करें क्रेडिट कार्ड की, तो क्रेडिट कार्ड बड़ी एक स्पेसिफिक और कैटेगराइज्ड मार्केट को जाता है. अब क्रेडिट कार्ड के अंदर अगर आप आज देखें तो नॉर्मली डिसीजन मेकिंग मैनुअल है, मतलब उसकी वेरिफिकेशन भी मैनुअल हो रही है, उसकी कॉलिंग हो रही है वो भी मैनुअल हो रही है, डिसीजन मेकिंग भी जो सीआईयू का पूरा पार्ट है वो मैनुअल हो रहा है, कार्ड अप्रूवल पूरी मैनुअल हो रही है. तो हर चीज ऑन द मैनुअल साइड है. ये सारे का सारा आप एआई के ऊपर लेके जा सकते हैं कि आप कहें कि यार आप इंडस्ट्री में आज अगर 15 दिन बाद आप डेबिट कार्ड लेते हैं तो मैं आपको इंस्टेंटली सेम डे डेबिट कार्ड आपका अप्रूव करके आपको कोरियर कर सकता हूँ, और इन द मीन टाइम जब तक आपके पास कार्ड नहीं आता तो उसका वर्चुअल कार्ड भी आपको दे सकता हूँ. ये सारे वो एवेन्यूज हैं जो बैंक्स शायद कोरिलेट इसलिए नहीं करते कि नॉर्मली व्हेन आई वाज एन एमसीबी तो सबसे बड़ा क्वेश्चन होता था कि यार ये जो आप इनिशिएटिव, ये जो आइडिया आप बात कर रहे हैं, ये ऑलरेडी कौन कर रहा है. जब आप कहते हैं कि नहीं जी ये कोई नहीं कर रहा, ये नया आइडिया है, तो कहते हैं अच्छा यार पहले किसी को शुरू करने दो, जब कुछ कर लेंगे हम देख लेंगे एक पैटर्न, फिर हम इस पे बात करें. That's the biggest problem.
And yeah, I agree. And like I said, I think the audience who are listening to our conversation would also compare the AI achievements across the globe versus what we are sort of discussing. What we are talking about is still primitive, basic AI capabilities. And the reason I'm still focusing on talking about these basic capabilities is the fact that our customers and the entire industry, there are more sophisticated and fancier opportunities of AI and machine learning, but I think it is important for us to get our house in order first, get the basics implemented, make sure that we don't just jump onto a concept. There is a value chain that we have to make and make sure it is in place, and then we are able to deliver the promise to our customers. So ये जो आप examples दे रहे हो, I remember a few days ago I got an email from a neo bank from Australia. I used to be there, 86,400, and they send an email saying in last 1 year we've done some, we have made various achievements. And by the way, there was one thing that caught my eye. They said with the help of electricity bill payment capability that they offered in the mobile app, that predicted the future energy utilization, customers were able to take measures and save close to $250,000 in 1 year. So ये जो आप AI की बात कर रहे हो, personal finance management is a well-known, mature domain now on digital customer experiences. So credit card का usage है या आपके spending का behavior है, उसको predict करके banking applications can actually help customers कि वो अपनी spending patterns को improve करें and spend less on one category or maybe do a different type of saving to achieve their future goals. So yeah, absolutely, AI जो है वो बड़ी exciting opportunities offer करता है, even अगर आप उसको बड़े basic primitive तरीके से भी use करें.
True that. और basic देखिए, हम basic point क्यों discuss कर रहे हैं? आज तो हम scratch से भी पीछे खड़े हैं. अगर आज हम पाकिस्तान के अंदर 35, 36 या maybe 32 banks are working, तो आप देखिए कि कितने बैंक्स हैं जो AI के फ्रंट के ऊपर एडवांस्ड काम कर रहे हैं. आप उंगलियों में भी गिन सकते हैं. अगर हम बेसिक लेके चलते हैं, लेट्स से एक दो यूज केसेस हर कोई शुरू करता है, तो विद इन ईयर, विद इन मंथ्स हम आगे जा सकते हैं. नॉट ओनली दी सेलिंग, आप सपोर्ट पार्ट को देखिए. आप फॉर एग्जांपल आपकी एक मोबाइल ऐप है, उसके ऊपर आपका एक कस्टमर है जो ट्रांजैक्शन परफॉर्म कर रहा है. अब आपके सिस्टम को रियल टाइम पता है एट एवरी स्टेप कि कहाँ जाके कस्टमर स्टक हुआ है, कहाँ जाके ही और शी इज फीलिंग प्रॉब्लम. वो आपका AI बेस्ड सिस्टम ना सिर्फ उसको डिटेक्ट करके रियल टाइम सपोर्ट प्रोवाइड कर सकता है, फ्यूचर में उसको कैसे खत्म किया जा सकता है, उस इशू को, उस प्रॉब्लम को कैसे फिक्स किया जा सकता है, ये ऑन द टेबल आपके सामने है. मैं अगर किसी बैंक की ऐप से बिल पे कर रहा हूँ और बिल पे नहीं हो रहा, मुझे लेट से वो रिटर्न बिल का एरर आ रहा है, या वो अमाउंट जो है वो पूरी शो नहीं कर रहा, या उसकी कोई डेट सही नहीं आ रही, ये सारे पैटर्न्स मेरे सामने पड़े हुए हैं. उसके ऊपर मैं यूज केसेस बना के कस्टमर सपोर्ट खड़ी कर सकता हूँ रियल टाइम, ताकि मेरी जो कॉन्टेक्ट सेंटर के ऊपर, मेरा ख्याल है इस वक्त जो बड़े बैंक्स हैं वो हंड्रेड्स ऑफ थाउजेंड्स ऑफ कॉल्स रिटर्न कर रहे हैं ऑन डेली बेसिस, मंथली बेसिस, वीकली बेसिस, और कस्टमर जो कि प्रॉब्लम फेस करते हैं. एक कस्टमर का सबसे बड़ा मसला है कॉल करना, फिर उसके बाद उसके सोल्यूशन के लिए वेट करना. आप देखें जो सैफ ट्रांजेक्शन आपकी फंसती है जस्ट बिकॉज ऑफ रीजन कि जी वो इन टाइमली सेटल नहीं हुई है, तो वो सैफ में पड़ी हुई है. कस्टमर कॉल करेगा, वो किक इन होगी, वो क्लियर होगी, तब जाके कस्टमर को क्रेडिट रिवर्स होगा. ये सारी की सारी चीजें आप AI के थ्रू एक सेकंड में हल कर सकते हैं. और आपकी जो उसके ऊपर HR बैठी हुई है, जो आपका मैनुअल इंटरवेंशन हो रही है, वो सारी की सारी आप खत्म कर सकते हैं. ये बड़ी बेसिक चीजें.
अच्छा, मैं थोड़ा सा I actually want to talk about chatbots. It is believed कि ये कॉल सेंटर से ट्रैफिक को रिड्यूस कर देंगे. That's true, but maybe not our part of the region. यहाँ पे अभी भी कस्टमर्स जो उनसे हैं वो सॉर्ट ऑफ रोमन उर्दू में कम्युनिकेट करना चाहते हैं कॉल सेंटर के साथ व्हेन इट कम्स टू चैटिंग इंटरफेस, लाइव चैट वगैरह पे. और वहाँ पे you actually have to invest a lot more. Google अभी इंडिया में भी स्ट्रगल कर रहा है ये conversational AI के ऊपर. So I think that's too early for us to adopt in Pakistan. The other piece is, with regards to AI, इसमें हम कस्टमर के बिहेवियर को प्रिडिक्ट करके उसे क्रॉस सेल और अप सेल और उसकी कन्वीनियंस के लिए कुछ चीज़ें ऑफर करना चाहते हैं. अगेन सोफिस्टिकेटेड कॉन्सेप्ट है. आई डोंट, मे बी कुछ बैंक्स इंडस्ट्री में इस पे काम कर रहे हैं, बट लार्जली मैंने टेलीकॉम इंडस्ट्री में देखा है कि वो काफ़ी सोफिस्टिकेटेड तरीके से इन कॉन्सेप्ट्स को यूज़ कर रहे हैं. But I think, I would say in the end, my personal view is AI is just a tool that gives you the opportunity to service your customers better. What is more important is for you to, as an organization or a service provider, you to decide what kind of experience you want to offer, and how do you want to meet the customer expectations, and then work backwards for you to develop or design that experience where AI and machine learning capabilities will fit in, and how do you offer this on a sustainable manner. And that's where I think the biggest gap is. Traditionally customers जो उनसे हैं वो banking डिमांड करते थे और ब्रांच में आके काफ़ी देर वेट करते थे. अब वो स्विच हो गए हैं tables. So banks are trying to approach to customers and proactively offering them a variety of services. And this is where I think वो जो एक mindset का shift है वो भी चाहिए होगा कि ये जो सारी capabilities AI की, robotics की, machine learning की हम बात कर रहे हैं, ये एक्चुअली कैसे एम्बेड होंगी हमारे टेक्नोलॉजी डिलीवरी वैल्यू चेन में. या और देयर आर अदर इम्पोर्टेंट एस्पेक्ट्स कि ये क्लाउड कंप्यूटिंग के बगैर काफ़ी कॉस्टली होगा फॉर इंडस्ट्री टू ऑफर दिस कैपेबिलिटी एट एन इंडिविजुअल लेवल. एक बैंक या कोई एक ऑर्गेनाइजेशन इन्वेस्ट करे और इसको मेंटेन करे. There are much cheaper options available on the cloud, and that's where I think कुछ bottlenecks हैं, at least currently. Yeah.
I agree with you. जैसे अभी हम बात कर रहे थे on the especially for जो रोमन लैंग्वेज में लोग बात करते हैं, तो इसके ऊपर इंडस्ट्री में भी बहुत काम हो रहा है और आई एम श्योर बहुत से बैंकों में काम हो रहा है, इंक्लूडिंग माय ओन बैंक. हम AI बेस्ड चैटबॉट के ऊपर इन हाउस काम करें बिकॉज हमारे पास यहाँ पे इन हाउस पूरा सेटअप है जहाँ पे हम AI BI पे और बाकी जो डेवलपमेंट उस पर काम करते हैं. तो हमने टोटल रोमन और उर्दू बेस्ड एक चैटबॉट बनाया है अपने वॉलेट कस्टमर्स के लिए. तो कस्टमर को फुली सपोर्ट करता है, वो किसी भी लैंग्वेज में लिख रहा है. इवन हम रीजनल लैंग्वेजेस के ऊपर भी वी आर प्लानिंग कि हम उस पर भी काम करें ताकि कस्टमर से इंटरेक्शन बहुत बेहतर हो सके. ऑन अदर देन दैट जो कुछ फिनटेक्स हैं, कुछ सर्विस प्रोवाइडर्स हैं जो इसके ऊपर काम कर रहे हैं. मैंने एक कंपनी का डेमो भी देखा था जिसमें वो फुली रोमन और उर्दू चैटबॉट को सपोर्ट कर रहे हैं. तो आपका कस्टमर का 75% जो लोड है वो वहीं से निकल जाता है. बिकॉज आप अगर किसी भी बैंक की कंप्लेंट्स रेशो देखें तो वो मेरा नहीं ख्याल कि किसी बैंक की भी 15-20% से ज़्यादा होगी. बाकी जो 80% कॉल्स हैं या तो वो एक्टिवेशन की हैं या वो क्यूरीज की हैं या वो किसी टॉपिक के ऊपर हेल्प लेने के लिए है. तो ये सारी चीज़ें आप AI पे डाल के आपका 70% तो आप ट्रैफिक कम से कम कॉन्टेक्ट सेंटर की कम कर सकते हैं. तो आपकी रियल टाइम पे कंप्लेंट्स हैं उसको भी मे बी आप अगले फेज में उधर राउट कर सकते हैं. बट आज के दिन में जो आपकी 100 कॉल्स आ रही हैं उसमें से 70% तो आप सॉर्ट आउट करके उधर ले जा सकते हैं.
Technically yes, but operationally एक एंटरप्राइज में इसको सेटअप करना और फिर स्केल करना, लोगों को एजुकेट करना, that is a bigger challenge and that takes much of the effort. So you really have to decide आपकी एफर्ट का बेस्ट आउटकम जो है वो किस अपॉर्चुनिटी से निकलेगा. So what you are saying is technically correct, but when you come down to implementing in an organization, that's where the other challenges starts to pull you back.
I agree. The major part is कि बैंक का जो एक स्ट्रेटेजिक व्यू है वो क्या है इसके ऊपर, कि वो कौन से यूज्ड केसेस को इसमें जाके उसका सोल्यूशन लेना चाहते हैं, कौन सी मैनुअल इंटरेक्शन को खत्म करना चाहते हैं, कहाँ कहाँ इनोवेशन, ये सबसे इम्पोर्टेंट है. बिकॉज ऑनेस्टली स्पीकिंग मैंने बहुत सी जगहों पे देखा है कि लोगों को एंड गोल नहीं पता होता. वो एक एक्टिविटी स्टार्ट कर देते हैं जस्ट लुकिंग एट द कंपटीशन कि अच्छा यार फलां कर रहा है तो मुझे भी कुछ करना चाहिए. और उनके माइंड में एंड गोल क्लियर बिल्कुल नहीं होता कि मैं इसे अचीव क्या करूंगा, मैं कौन सा कस्टमर प्रॉब्लम को सॉल्व करने जा रहा हूँ और उसका मेरे बैंक पे इम्पैक्ट क्या आएगा. ये बहुत इम्पोर्टेंट.
Yeah, that's true for everything beyond AI, by the way. That's I can't agree more.
तो थैंक यू हमायूं. आई थिंक बड़ी अच्छी डिस्कशन रही है एंड होपफुली इसके ऊपर कई लोगों का जो एक फूड फॉर थॉट है वो आया होगा. तो लेट्स होप फॉर द बेस्ट कि इस एरिया में भी काम हो पाकिस्तानी बैंकिंग इंडस्ट्री में, ताकि ज़्यादा से ज़्यादा यूज केसेस आए ऑन द टेबल और फिर ज़्यादा से ज़्यादा और कंपनीज आ सकती हैं टू सर्व यू बेटर, आई बिलीव.
Thank you, Sohail, and I agree with you. I think what is more important is for the industry to keep trying. We can't really say if somebody is doing better than the other one. The more people try new things, it gives an opportunity for everybody else to be educated and become aware of the these new concepts and things.
True that.
Thank you, Sohail, once again.
Thank you very much. Thank you.
Thank you.
Thank you so much, Sohail Saab and Humayun. It was really interesting. We have taken quite learning from you guys. Now it's time to end the show. So thank you once again, everyone, especially our supporters, State Bank of Pakistan, Pakistan Telecommunication Authority, and NITB for the support. And a very special thanks to our exclusive sponsor, Finca Microfinance Bank. Hopefully, next year we'll have the 14th session, but that should be, inshallah, a physical interaction as well as virtually we'll take it up. Inshallah, see you next year. Take care.